Morning, friends, and I'm very happy to see you once again today. Today is going to be a very interesting day because I have planned to cover the portion which I left in Npa plus some of the techniques of that is Npa games. I'm going to touch it. Then I'm going for the full swing of advances. Then go for revenue leakage, records, and anything that is left also I'll cover, and to the maximum extent I'll cover. And I think before going to the presentation, our Joseph sir has raised one question, that is please explain what is direct agriculture. Joseph sir, are you now here? I think Joseph sir, yeah. Joseph sir, you have raised a question. What is direct agriculture? Direct agriculture is nothing but those agricultural activities which are directly involved in the cultivation of the cultivation work. So which is directly whenever whatever thing that you cultivate. So when you do some activities, when crop comes out, all are coming under the category of direct agriculture. But for the classification of direct agriculture and indirect agriculture, I request you to refer the NABARD norms. So you have to refer the NABARD norms. There you will get full list of direct agriculture and indirect agriculture list. And indirect agriculture and non-direct agriculture, you have to follow the regular Npa norms. For direct agriculture, yesterday I explained that is from due date you have to add from 2 crop season for the short-term crop and 1 crop season for the long-term crop. And second question you have raised is whether there are any limits to individual, LLP, partnership and company to treat as direct agriculture. No, there is no such limit. It depends on the bank's policy. There you can raise any, you can get loan from the bank. There is no specific thing. Anyone can get the direct agriculture. Now, normally it should be, on the agricultural activity. That's all. And another question, Mr. Guntur Nagaraj raised another question. How to conclude a person or business is doing other activities than business activity in CC or SOD? That is, in our recent stock audit, client holds a business on paper only and doing real estate business in that business. See, Nagaraj sir, you have to see what are the debits that are there in the account. If the debit is directly related to some real estate business, then it's a clear violation of sanction terms and conditions. It is equivalent to the fund diversion. So all the fund diversion, you can even you can term that as red flag account, RFG, that is RFA, or even you can directly report this as fraud, because RBI has clearly said that any fund diversion, it also amounts to fraud. So this is the 2 questions I received today, and I think our friend asked, Hemant sir asked, anyone received the branch names of allotment letter? I think today only most of the auditors, they are going to get it. And I want to say, I want to make a request to you. Please attend all the unknown numbers, because you may get a phone call from the banks. Don't skip it. So don't leave any phone call, because that will definitely help you to get the audit. This is the information I want to say you. And also, I think I have not received any other question other than this, only except the link connection problem. Yeah, now everything is solved. And for the today entire session, you have to log in only in this thing. Then this is the thing one has to concentrate. In the MOC, that is, it is called as unrealized interest. It is not UR realized, unrealized. So it's unrealized interest. I have typed it as UR realized. Ignore it. So unrealized interest. That is, once if you identify an account as NPA, and that is this concept is applicable only for the first time NPA. And if the earlier year someone has identified NPA, this concept is not applicable. So for the first time NPA, you have to follow the unrealized interest. That means you have to remove all the interest which are not serviced in the account. So previously, that is before 1/10/2021 master circular, they say that you have to reverse the previous period interest. Now they say that you have to remove the past period interest. So past, this is only addition. That is, what is a past period? That means you have to calculate the unrealized interest from the date of sanction to the date of identification of NPA. So this is a latest thing that you have to be very, very careful. So you have to reverse all those unrealized interests. It's a very tedious job. It's a very tedious job. And we have to presume that the last year auditor has done the audit correctly. So this is a thing that you have to bear in mind. So you have to remove all the, I will tell the method of doing how to calculate the unrealized interest. I will tell with an example. And in this new circular, they say that you have to remove not only unrealized interest, you have to remove the unrealized commission and expenses of past period. Previously, they say that this is a previous year. Now they say that past period. That means from date of sanction to now, you have to do it. So remove all unrealized interest, commission, and expenses of past period. I'll tell the way in which you have to do it. Next one is you add when you can add the interest, but when you add the amount remitted into the account, you have to consider only the unrealized interest. And I want to make a request, Bharani, please don't scribble on the screen. Bharani Kumar, don't scribble on. Bharani, please wipe out. Don't scribble on the screen. This is going to be a recording one. This is going to be a headache for all. Otherwise, if you're not interested, please don't scribble on the screen. Immediately, why you? So, so you have to add only the genuine credit. So I think your mood is out now because of this scribbling on the screen. And next one is we have got some 3 methods of calculation of unrealized interest. We have got 3 methods of unrealized interest. One is in both the years you have got unrealized interest. In both the years, see, Bharani, this is a problem that you have created. This is going to be for the entire 3 hours. This is your problem. I mean, my mood is out. Okay, in this year, 3 methods you have to follow in the unrealized interest. One is in the both years you have got unrealized interest. For let us say, for example, for 2 years, that is 2021 and 21-22. So you have got 2 years, and you have to add all the interest from April to March. That is, you have to start from April to March. You have to add only the interest. This is only unrealized interest. The same concept you have to apply for the what's that? You have to apply for the income, interest, commission, and everything. So you have to add all the interest from April to March. Let us assume that last year auditor has done the working correctly or not. So we have to presume that last year auditor has done the working correctly, and we are doing the working only for the 2 years. So I have given 2 years, 2021, 21-22. In 21-22, you have identified that account as NPA. So 2021, you have to add all interest from April to March, 48,000. That's the interest to be paid by the party. But when you add the genuine credit, it comes to 32,000. So the remaining is a shortfall is called as unrealized interest. That is 16,000. So this is the unrealized interest. That is among the 48,000, only 32,000 is paid, and 16,000 is the shortfall. So this is a first year short. So that is called as unrealized interest for the year 2021. And for the year 21-22. So 21-22, that is total interest payable is 52,300. That is the account has been debited. We will calculate from the date of sanction. Yeah, Sanjana, you are correct. You have to calculate the interest. No, here I'm taking only the 2 years. I'm taking only 2 years, for example. I'm not taking for the, not going for the early rates, but as for the RBI norms, you have to go for the earlier period also. For the earlier period also, you have to go. And here, it is not, you need not go from the sanction letter. In this example, I have considered only 2 years period. only the interest and not charges. And only the interest you have to take and not charges. I think who has raised this question, and Joseph sir, you have to consider only the interest and not charges. But other things you have to do separately. Other things you have to do separately, and if possible, because they say that you have to give unrealized interest towards interest, unrealized interest towards commission, unrealized interest towards other charges. So you can club it and do it, but normally they are doing only the unrealized interest. So that is called as URI. So in this second example, the shortfall is 9,300. So for the year 2021, the shortfall is 16,000, and 21-22, the shortfall is 9,300. So what is the total unrealized interest? That is called as 25,300. This 25,300 is the interest which has not been realized, but this has been given credit to the loan, credit to the interest account. This we have to remove it. So this 25,300 rupees, you have to remove it from the interest that is being given credit to the account. So this entry you have to pass in MOC, Memorandum of Changes, in that. So that means you have to say interest is a credit. So you have to debit this interest and credit the loan account. Debit this interest. So unrealized interest you have to debit, because you have to remove the interest. So interest is on the credit side. So when you want to remove it, you have to debit the interest. Debit the interest. Okay. Then credit goes to the party. So debit interest and credit go to the loans and loans account. So in this manner, you have to pass the MOC. And the second method, in this second method, I want to say the second method once again, because and the second method is add all the interest. Same thing. See here. In 2021, 21-22, I did the same exercise, but in 21-22, you have got a surplus interest of 17,700. But in 2021, there is a deficit of 16,000. There is a deficit of 16,000. In 21-22, there is a surplus of 17,700. The deficit of 2021, you can adjust against the surplus of 17,700, because still it is an arrears. It has not been adjusted to the principal. So this next year, the party has paid some amount extra. This amount can be adjusted against the 16,000. So this is also possible. So for the year, for this method, the unrealized interest is 0, because this 16,000 shortage of earlier year is being removed, is being adjusted in the 17,700 amount. So there is no unrealized interest. Is it clear, sir? But in the first method, both the years have got shortage. So that is 25,300 total unrealized interest. In the second method, 2021 has got short and 21-22 has got surplus. This year's surplus, that is present year surplus, you can, with the help of the present year surplus, you can eliminate the last year deficit. So this is possible, and not vice versa. That is rule number 3. So is it clear, sir? Second principle and first method, is it clear? And this I already given that in my working sheet. I've already given. So you can go through it and you can easily understand. Now I'm going to the third method. In the third method, the 2021 has got surplus, 21 has got deficit. So this surplus would have been adjusted to the principal in the last year itself. So because there's an interest surplus, this surplus would have been adjusted to the principal. That is, they would have reduced the outstanding balance. So there is no amount here. There is no amount here in the last year. So, but this year you have got a deficit of say 2,300, for example. This is called as unrealized interest for the year 21-22. This deficit you have to adjust against the. You can adjust against the. You can adjust from the interest. So all these 3 methods are very, very important. So once again, I'll repeat. In the first year, you have got deficit in both the years. So all the interest you have to add, and total of 25,300 you can deduct from the interest. The entries has to be passed as interest upon data to loan account, because you have to reduce the interest. So interest upon data back to credit to the loan account. This is the MOC. And in the second method, 21-22 has got surplus, 16, that is 2021, you have had a deficit. This surplus you can adjust against this deficit. Okay. Then this remaining after 16,000, you have got a surplus of 1,700. This you can adjust to the principal. So normally system will take that, but when you want to remove it, you can remove it, but you can adjust, but there is no unrealized interest in this second method. In the third method, last year you got surplus. The surplus would have been adjusted to the principal. That means there is no unrealized interest, that is zero. But 21-22, the deficit is 2,300. So unrealized interest, as per the third method, is 2,300. This you can adjust from the interest. Now, this is with reference to unrealized interest. So, is it clear, sir? Because this is going to be a very interesting thing. This is applicable for the first time NPA. Okay, now I am moving to the next portion called erosion in property value. Erosion in property value. That means at the time of sanction, the engineer would have valued some property. Say, for example, you would have valued, say, 40 or some 40 lakhs. But due to some other reason, say due to change in the importance of the place or due to some legal dispute, the property value would have come down. So once again, if we value the property, the value will be less. Here, I want to share one case I'll share, because I helped my client to get 85 lakhs poultry loan. And at the time, when he has availed the poultry loan, the property was valued around 1,50 lakhs. He has availed 85 lakhs. Then after 2 years, railway authorities, they acquired the land. When they put the track actually goes in the middle of the shed, poultry shed. That means the shed has to be removed, and that land is being divided into two parts. So when they divide the land into two parts, on the road side, the extent is very less. On the back side, the extent is more. But to go to that back side, the one has to travel some 4 to 5 kilometers to reach this place. So that means suddenly the value is decreased. And when any central government has acquired any property, even the remaining property will have only a less value. And when they revalue the property, they revalue the property around only 7 lakhs. So at the time of sanctioning, the loan, it was around 1,50 lakhs. Due to this concept, the value has come down drastically, and they valued around 7 lakhs. So here it's a rule. If the value of reduction falls in between 10 to 50%, suppose if the value is 1,50 lakhs, so 10% is 15 lakhs. Minimum it should be 15 lakhs. That means you can put that as D3 directly. That is doubtful 3 directly. And if the value falls below 10%. So what's it? 10% of 1,50 lakhs? It is 15 lakhs. And the engineer has valued the property at 7 lakhs only, which is less than the 10%. So you have to define that asset classification as loss asset. So it's a very, very practical thing that I had in my practice, because at the time of sanction, it was 1,50 lakhs. Due to railway authorities acquisition, the property value has drastically come down to 7 lakhs. So when it is less than 10%, that is 1,10 lakhs, 10% is 15 lakhs. And now the value is 7 lakhs, which is less than 10%. So you have to classify that asset as loss asset. If the property is valued around 20 lakhs, for example, it is more than 10 lakhs, but less than 50%. So that has to be classified as D3. So is it clear, sir? Because this is also going to be a very, very interesting thing. So whenever any acquisition of property has come, then you have to revalue the property. That is, branch manager has to revalue the property once again. We will check the valuation report in each way. Yes, Sanjana, you have to check the valuation, and you have to go through the file. And is there any case of acquisition? And if the engineer has valued the same property at same rate or some more than that, you need not worry. And if there is a reduction in value, you have to calculate. You have to adopt the concept of erosion in property value. Is it clear, sir? Can I move to the next point? Any doubt in erosion in property value? Any doubt in unrealized interest? You can ask. So here in this example, the property value is 40 lakhs at the time of sanction. Present property value is 18 lakhs. That is less than 50%. That is 45%. And present property value is 2 lakhs. Another example, if it is 18 lakhs, it is 45%. And if it is 2 lakhs, means it is only 5%. So in the this one, if the property is valued at 18 lakhs, then that account has to be classified as D3. And if the property value is valued at 5%, I mean 2 lakhs, which is less than the 10%, you have to value that loan advance amount as losses. Karan asked if bank has 2 years old, any valuation, Karan, and you need not bother about this, whether it's a 1 year old or 2 years old. What is the present value? From the present value, you have to calculate the erosion in property value. Normally, a property valuation is valid for a period of 3 years. And once in 3 years, they have to be valued once again by the another engineer and not by the same engineer. Whether the loan is alive or as NPA. Even that means the NPA account has also to be revalued once in 3 years. You need not bother about the suit filed account, but if it is an NPA account, you have to revalue. That means all the loan alive, other than the case filed, you have to value all those properties once in 3 years. And the new engineer has to revalue the property and not by the same engineer. This is all the comment you have to observe. Whether the valuation once in 3 years, all types of loans, yeah, any loan, house, Joseph, loan alive. Alive includes NPA and not suit filed accounts. It's a very, very simple thing. Alive means alive which includes NPA accounts and not suit filed accounts. That means the case has been transferred to suit filed account. You need not worry because the case has already been filed before court of law. Is it clear, Joseph, sir? Whether it's normally housing loans will not be valued by anyone, but as an auditor, you have to observe this point and you have to give. And this is the thing. And next, I'm moving to the next point of presentation. That is additional information is provision is on the outstanding balance and not on net NPA. What is net NPA? Gross NPA minus provision is called as net NPA. So you have to make the provision on the total outstanding balance. NPA. And this I'll skip because it's all valuation once in 3 years for NPA accounts also. And 10 crore and above, you have to study the downgrade and upgrade. You have to conduct the downgradation and upgradation study carefully. So this is additional information that I want to say about the NPA. And now I am moving to the new technique called Baba Mutra. This is called as Baba Mutra. Even a layman can easily identify, but this is only a raw technique. This is not a home technique, but easy understanding. You can follow this so that even you can delegate this to your staff. And for this, you have to ask for the loan trial balance. You have to ask for the loan trial balance. And kindly watch my fingers. Kindly watch my fingers. And this is a very, very important thing. But this saves a lot of your time. And you have to ask for the loan trial balance. Simply whenever the manager takes and gives you the printout of loan trial balance, which may run into from 400 to 500 pages, but you have to ask the manager to exclude the jewel loan. But they can say that, sir, you can view this in the system, but don't view that in system because that will affect your eyes. That will affect your eyes because you have to see the system for more than 500 pages. So that will definitely affect your eyes. Please ask the manager. They will provide it. And now with the assumption that you have got the loan trial balance, now this is a left-hand mutra. For this finger is for the date of loan and due date of, this one is for due date of the loan. This one is for date of loan. This one is due date of the loan. You have to put the fingers on the loan trial balance. Just pull it. The outstanding loan due date is 2005 and see the corresponding entry. Is there any outstanding in the account? And if it is not there, then leave it. Then pull. This loan trial balance, it will give loan details from date the branch has opened the account. When the branch has opened the account, from that date to now, everything will be reflected in the loan trial balance. So Date of sanction, due date of the loan. Just pull it, pull it. Now the year comes to 2009. You are going audit for the year 2022. And they say that loan amount is outstanding. Then what the banker has done, whether they have transferred this to NPA or not. If they have not transferred the same thing to NPA, and if they still say that it is a standard, you have to convert that as directly as D3, because loan amount is due on 2009. After 13 years also, they say that this account is standard. How is it possible? It is not possible. This account has to be treated as not only NPA, you have to classify that account as direct D3. You can put it. And it is not a substandard account. It is not a substandard account. One finger is on the date of loan and another on the due date of the loan. Just put it. Yeah, Sanjana, you are correct. This is left hand mudra. Just pull it, pull it, pull it. Now the loan amount is 2018. And now you are going audit for the year 2022. What is the real status? So 18. So even if it is 18, you can directly put in D3 also, because if there is no pro note and if the account is not having any credit into the account, you can directly refer that as D3. But it depends on the situation. But it is only a raw technique. It's not a confirmed technique. But for easy understanding, I have told you this technique. Now coming to the right hand mudra. Yeah, see, Sanjana, left is date of sanction. This finger is outstanding, due date of the loan. Just pull it. If the loan, when outstanding is there, it exceeds the outstanding due date. That means what has happened to that outstanding balance? If the branch they have classified as NPA, okay, fine, leave it. And if the branch has not classified that account as NPA, and if they still put it in standard, then you have to pass the NPA entry. That is, you can directly take that account to D3. Is it clear? It is only the outstanding balance. You have to see it is the due date. And here you have to correspondingly, you have to see the outstanding balance. If the outstanding balance is there, then what the branch has done so far. If they transfer to NPA, leave it. And if they have not transferred that balance to NPA and if they still put it in standard, then you can reclassify that as a NPA account. Which column will be there in the loan trial balance? See, there are a lot of columns. One is date of sanction and due date. And in the middle, you can get party's name, all address and everything you will get it. So that's why I folded this. So this is the first exercise. Now I'm coming for the right hand mudra. Loan amount sanctioned. This one is for outstanding amount. Just pull it, pull it. The loan amount is 10 lakhs. Outstanding is 12 lakhs. Okay, that means that no interest is serviced, no repayment of the principal is being made. So that account has to be treated as NPA. And if what the branch has done for this, and if they classify this account as NPA, you can leave it. But if the branch has not classified and they put it in standard, you have to convert this outstanding balance as NPA subject to the date of sanction. Suppose if the date of sanction is only 3 years, so you can transfer this balance to substandard. So is it clear? Left hand is for date of sanction. Left hand is for date of sanction, due date. And right hand is for the loan amount sanction, outstanding amount. Just pull it, pull it. So here, it's the usual identification. In the manual mode, you can do it. Ask for the loan trial balance and apply Baba Mudra technique. And left hand is for date of sanction and due date of sanction. And right hand is for the loan amount sanction and outstanding. If you have any doubt, it's only a raw technique, but this is not a confirmed technique, but on easy way, you can easily identify. Okay, this is what I want to say about the NPA for today's class. Any doubt with reference to this also, you can ask me. Now I am moving to the NPA games. So this will take another 10 minutes. What are the techniques that the bankers they adopt to get the signature by avoiding some technique? So This is one. Change of this is a very, very important thing that every auditor has to see. Normally, whenever you are verifying the NPA, the manager used to say that, sir, software takes care of everything. This is the thing they used to say. Okay, the software takes care of everything, but they change the due date. See, in one of the bank that is in the Pudukkottai branch where I have gone for audit, I noticed that the due date of the current year is being shifted to the next year. For example, the due date of the loan is say 31/7/2021. If the amount has not been paid, the system will automatically say that that account is NPA. And Danny, sir, this technique can be used for term loan or anything, sir. Danny, it's only raw method. So you have to follow the same rule, but this is only a raw technique. So shortcut method, I would say. This is not a foolproof method. This is not a foolproof method, but it's a raw technique. That's why I use the word raw technique. Shortcut method, you can do it. But if you are not well versed in system, because in system you can do it, but if the system does the mistake, then how to find it? So that is why I adopted that Baba Mudra technique. And the first thing they are doing it, they change the due date. See, in this case, 31/7/2021. They, for example, if the 31, sorry, that is for the year 19. So for 31/7/18, 31/7/18 is the due date, but in the system operation, they change the due date to 31/7/2019. So when you are going audit for the year ending 31/3/19, for example, when they shift the due date from the current year to the next year, what the system put? It puts standard, but automatically this is wrong. Actually, that should be NPA. But the manager, what they say that they convert, they say that everything is on everything the system takes care. So this is one of the technique that they have adopted. So for that, please define the sanction letter, work out the correct use. Based on that, you can arrive at the due date. Okay. I think our Vijay Pratap sir, please let us know. Baba Mudra once again, as I missed due to some network issue, is a report can show accounts has been. Is there a report which can show us which account has been changed? Sir Sanjana, for this only by seeing the sanction letter you can do it. This you cannot find manually. So you can find it manually, but this you have to refer to the system, refer to the sanction letter, thereby you can arrive at. And for the request of Vijay, I want to say the Baba Mudra once again, please just follow me. You have to ask for the loan trial balance. This is one. And second one is, you have to ask the manager not to incorporate the jewel loans. This loan trial balance you can get from the day on which they open the branch till now. Okay, total entire history of the loans they will give. So you have to adopt left hand. Left hand is date of sanction and due date of the loan. Date of sanction, due date of the loan. Just pull it, and the loan is 2010. Due date is 2010, and go and see is there any outstanding balance. If there is no outstanding balance, leave it. Then go. Then for 2012, when you happen to see something is there in the outstanding balance, and you see whether the branch manager, whether the branch has classified that account as NPA or not. If they have not classified that account as NPA, you can directly classify that account as D3 also. Directly you can take this account as D3 because the outstanding balance is there where the due date has expired in the year 2012. This is one thing with reference to due date and date of sanction and due date. Coming to the right hand, loan amount sanctioned, outstanding amount. Just pull it. The loan amount sanctioned is say 10 lakhs, outstanding is 12 lakhs. That means the outstanding balance exceeds the loan amount. What happened? Whether the branch has classified that account as NPA, yes, means you leave it. If it is not so, then you have to classify that account as NP. That's all. It's a very, very simple thing. I think, Vijay sir, I think, are you clear with this? Now, this is another technique. They say that change of due date. See, in that branch where I have gone for audit, I noticed that they made they tampered the master record to change the due dates. Then when I asked the question, who has changed it? And the manager said, I don't know. Then I called the regional officer, something has taken place in the system and I want to know the person who has committed that. And they say that, sir, even we don't know, sir, who has altered the dates. So that means someone has entered into the bank system. They change the entire due. It's a cleverness because they want to show and they want to prove that all accounts are standard. So this is one of the bad technique adopted by the branch. So what I did, since they tampered the master records without permission, I have entirely classified the entire branch transaction under the fraud. Because someone has changed the due date without permission. Well, it is a fraud. So then after seeing my report, lot of inquiries have been conducted by RBI and they have commented against the branch. But since I committed under as fraud, they had they had very big issue. They have created a lot of issues at that bank. So as an auditor, you have to be very, very careful. They change the due date to the next year, thereby they are avoiding the NPA. Arrive at so refer sanction letter, work out correct dues and arrive at your dues. Next one is showing NPA account as NPA. By eliminating wrong entries wrong entries in NPA account, that is genuine credit is not given credit to the account. Explain the auditor in person. And they have to explain it and they have to prove that this account is performing asset. So it is nothing but genuine credit should be there in the account. So an auditor has to ask for the explanation and the manager, they have to give the explanation. And after verification, the accounts have once again been transferred to the originality. So they say that, yes, it is NPA, they agree. After your verification, before you are signing, once again, they retransfer the same to the standard. But you have to be very, very careful when you arrive at a standard asset as NPA that has to be reported in the MOC, Memorandum of Changes. This is another technique. And next one is third method is giving loan to close NPA loan. That is why I said that I use the word genuine credit. So to close the NPA account, what they do, they give loan in another person's name, they gave direct credit to this account. Actually, if the loan is given for furniture business, the fund should have gone to the furniture business. And suppose the husband has borrowed the loan and the loan is being given in the name of the wife and the credit of that loan is coming to this loan. So that is why I said, what is the credit that is made in the NPA loan? If the loan sanction is 10 lakhs and the NPA is 7 lakhs, then this 10 lakhs is being directly given to the husband's account. So this account is to be treated as standard. This is a way in which they are avoiding the NPA, but this should not be the case because the credit should be a genuine one. The rule is giving loan to close NPA loan is also called as NPA. Even closure of loan by the same branch also they can give, and even sometimes they give the loan at the other branch also. So see the credit into the loan account and analyze the credit whether it's a genuine credit or not. This is a thing you have to be very, very careful. And now dummy entries, that is wrong credit into the account. You would have remitted some amount of say 10 lakhs. This has been given credit to some NPA account. After 2 days, they debit that entry saying that wrong credit. But what the system says, that's a credit. So based on that, the system says that that account is standard. But that is why I said you have to verify the genuine credit. And if there is any debit saying that it's a wrong credit, then you have to eliminate both the credit and debit. So what is the real position after that? Based on that, you have to arrive at the NPA. Is it clear? You have to remove the dummy entry. You have to remove the dummy entry. Dummy debit, dummy credit, you have to remove. And what's the real position? Then you have to arrive at the NPA. So the next day, that's why yesterday I said, what are the items that you can debit in term loan? Yesterday I said, on the items that you can debit in term loan, that is loan amount sanction, interest and charges. Beyond that, no debit is permitted in term loan. These are three things that you have to remember. Loan amount sanction, interest rate, charges. If they say that wrong credit, wrong debit, so that is a wrong thing. So you are not supposed to do it. So transfer on the next day. Baba Mudra due date, say, Joseph said, Baba Mudra is only a raw technique. I said it's a raw technique. So you have to do the working up to 31/12/2021. That is a due date. Because whatever be the thing, any loan due after 31/12/21, you need not bother because the NPA cutoff date is 1/1/2022. I said it's a raw technique. It is not a foolproof technique. Just for shortcut method, you can easily identify some few accounts. So that saves some of your time. And you bear this point in your mind and do the audit. And in dummy entries, they transfer on the next day. The same thing also, it will also happen in CC account. CC account, any amount can be credited, any amount can be debited. And if any debit is there in CC account, by saying the wrong credit in the CC account, you have to eliminate both the dummy entries. Then see the actual position. Types of MOC, regular MOC. If you say that it is advances, if it has become advances NPA, regular NPA, you have to pass the same ending. That is, you have to remove the, you have to pass the regular MOC entry for this type of mistakes done by the branches. Next type of thing is regional office message. Yes, this sometimes the managers say that, sir, our action is being ratified by the regional office. And they would have given some unwanted messages, that is, which is not an authorized message. Thereby, they say that yesterday also we discussed one thing: a cash credit account has to be renewed within a period of 180 days from the original due date of the loan. The branch manager proved that, sir, just now the regional office has renewed the loan, and they have shown the some fax message or mail message. Don't rely on it. Don't rely on it. You have to probe, is it genuine or not? And even they can give you a fabricated mail. They can give you fabricated fax. So you have to be very, very careful. And whenever you ask for the renewal, they produce these things. So you have to ask for the real, or you have to ask for the, or you have to verify the genuineness of that mail or not. This is also another technique adopted by the branch. And you can ask for the reference number and minute number. You can ask for the reference number and minute number. If they prove it, then it's okay. Otherwise, it's a wrong thing. And Sanjana asked, once an account is NPA, then unrealized interest will be reversed. Outstanding balance as on 31/3/22 and will also be removed from the balance sheet. Yes, Sanjana, you are correct. If you pass an unrealized interest, that means you have to debit the interest. That means you are removing some portion of the profit. And you are debited, and the party balance you have to remove it. So that means it has to be given in the advances. So debit, interest, credit, advance. So here the interest is debited. That means you are reduced your profit, and from that, you have removed the advance. From the advance account, you have removed, thereby the balance sheet is tallied. Ask for the reference number and minute number. Next type is allotting two SIF number. Now it is not possible. Previously, they allot two SIF number. At present, it is not possible, but previously, the customer has got two customer identification folio number. So when the NPA concept is, it is applicable only for the borrower-wise concept and not facility-wise concept. So sometimes the borrowers, if they are given some two SIF number, one they are considered for the one account and one for the another thing. So thereby they remove the NPA. So this is also you have to see allotting two SIF number. NPA is the same borrower concept. If one account is NPA, all are NPA. So to avoid NPA, they are creating another SIF, customer index folio number. So this is also another technique that the bankers they use. Temporary extension, that is they extend this already to avoid NPA. What they will do, even they extend the due date beyond 180 days also. Due date of renewal is extended with ad hoc. Within 180 days, the loan has to be renewed. Even they can extend the due date even beyond 180 days. So you have to be very, very careful. This is also another technique. Thereby, they are avoiding NPA. Subsidy adjustment. It's a very, very interesting case I want to share to you. So in subsidy, there are two kinds of subsidy. One is front-end subsidy. Next one is front-end subsidy is a subsidy which you can directly whenever a loan is sanctioned. If the subsidy has come for each and every subsidy, because this, please observe this, because this is going to be a very interesting one, and you should know what is a subsidy. You are seeing some lot of subsidy, and for this, please refer subsidy folio in the system. Subsidy folio in the system. Whatever be the credit, don't worry at all. If any amount is debited in subsidy, you have to see where the credit goes. Before that, I want to explain what are the kinds of subsidy. One is front-end subsidy, second one is back-end subsidy. In the front-end subsidy, whenever the loan is being received, whenever subsidy is received, this subsidy you can directly adjust to the loan immediately on the sanction of the loan. That is called as front-end subsidy. For that, the sanction letter has to specifically mention that this has to be adjusted. And back-end subsidy, that means back-end subsidy you have to adjust only after the only at the time of closure of the loan after the due date. Or sometimes they say that within 3 years you are not supposed to adjust the subsidy. That is called as a lock-in period. After subsidy, you can, after lock-in period, you can adjust. But this is also possible. But there is a rule for adjustment of subsidy. Before 3 years, if you adjust, then the party is not eligible to get this subsidy. If the subsidy is adjusted between 3 years to 4 years, 50% of the subsidy can be adjusted. And 4 years to 5 years, if you adjust the subsidy, the party is eligible to get only 75%, and the remaining 25%, the bankers, they have to send back the same to the government. Okay, this is the rule of subsidy. When the bankers, in order to avoid NPA, what they will do, they adjust the subsidy amount even at the first year end or second year end, and they say that, sir, the loan is low. So this is the subsidy adjustment. You have to be very, very careful. And here also I want to say one very important thing is you have to verify the loans. This you can take note of it. You have to verify the loans which has been closed during the year, and you have to verify the loans which have been opened during the year and closed during the year. Same year they opened, the same year they closed. You have to analyze the reason why they opened the loan account and why they closed the loan. If they want to close the account, from which steps? So this has happened in my statutory audit. So I went to the statutory audit. I found that a subsidy account is debited. Then when I scrutinized the account, the credit goes to a loan. Credit goes to the loan accounts. The subsidy is around 28 lakhs. I hope I never remember that around 28 lakhs subsidy is being given credit to the loan account. When I probed the accounts, I saw the modus operandi. That is, the branch manager say that because in order to give thrust to the government schemes, the branch manager has sanctioned 1 lakh and 50,000 rupees per subsidy per year has come to the branch. And he asked the party to go and please remit 51,000 rupees into the SB account. This concept is called as matching deposit. To the extent of loan, he asked the party to come and remit the money. This is called as 50 years. The party has remitted 51,000 and the manager has given loan of 1 lakh. So the 1 lakh liability, the bank has given the loan to the party. Next day, what the manager did, he has transferred 50,100 rupees from the SB account because this money has already been deposited by the party. So this we need not bother. But he has transferred the back-end subsidy towards the loan. So that way he has adjusted the subsidy. And he has adjusted the subsidy, he has closed the loan. And when you go to the audit, you can see that there is no figure at all. So the rule is the rule is back-end subsidy should be adjusted only at the year, at the time of completion of the loan. That is after 5 years. But in order to save the bank, what the manager did, he has transferred and he has closed the subsidy amount and he has given credit to the loan amount. I have reported this under fraud under 2 classes. One is receiving matching deposit. That is, yes, the branch manager has received the matching deposit from the customer and he has adjusted the same in the loan. And is a party to square the government funds because he has passed on the subsidy amount to the customer. So they had some understanding and he has released the subsidy amount without making anything into the, there is no asset created and nothing has taken place. Money has come from SB, the subsidy amount is given, both the things club and the manager has given one. So I said it's a fraudulent transaction. And when I had discussion with the manager and manager said, no, sir, this technique, this adjustment I have done only at the direction of the regional office. Then I called the regional manager and I said, sir, I'm going to classify this account as Npa, but sorry, this account as a fraud open. And since the manager has referred your name, I am going to include your name also in the report. Please send your staff number. And RM has got shocked because, sir, don't worry, so please keep quiet and I'll be there in another 1 hour. He has cancelled all programs and he has rushed to the branch. And I narrated everything and in order to save his face, the branch manager used the name of the regional office. So if the same technique has adopted anyone against you, at the time of your verification, you have to be very, very careful. Because nothing is there in writing. And the RM came and he has scolded the manager even across the counter, he has suspended him because he said that because you used my name wrongly, this auditor is going to classify me under the fraudulent activity. So this case is gone and I've done. I have not helped the branch, but I have reported on the fraud. But I have passed the MOC by transferring all the entries to bank. I have not transferred this to the SB account because SB account the money is being brought down by the party, so you need not transfer. But the subsidy I have to reinstall the subsidy to the back to the original position. So this is the case you have to see. So here my advice is please see the loan sanctioned during the year and closed during the year. This will definitely save you from identifying the fraudulent activities. So this is what I want to say about the subsidy. Sir, how do we know that subsidy has front-end subsidy and back-end subsidy? Joseph sir, please ask for the sanction letter of subsidy. A state government cannot give the subsidy amount directly. They will issue a sanction letter for issue of or release of subsidy to the bank. And in that they mention the modus operandi, how to adjust and everything they mention it. So very good question, Joseph sir. Next one is an NPA account is adjusted with subsidy. So this is another thing that you have to be very, very careful. Another points in NPA are there is title deed dispute. In case of title deed dispute, then that account may be due to some erosion in property value, the property may go to either D3 or loss asset. Second one is in case there is no DPN and it can be treated as loss asset. So these are the points that you have to take note of it with reference to NPA. There is no DPN and it can be transferred to loss asset and you cannot enforce before court of law. Third one is holiday for agriculture loan. They say that sir, that's a holiday period for agriculture loan. They are avoiding it. So if the holiday period is there as per the sanction letter, you can accept, and otherwise you have to classify the NPA as per the original holiday period. Means the holiday, they say that so crop period is this, and we will give you holiday period of another 6 months. So what is the due date? From the due date, you have to calculate the 1 plus 2 crop season or 1 plus 1 crop season. So everything you can identify from the sanction letter. And Sanjana asked, after this topic, please tell us the list of documents report we should ask from the manager. Yeah, that is there in the presentation, Sanjana, that I'll take in the afternoon. I think I know Sanjana. Na? See, among this, I want to say, I want to tell about Sanjana. Sanjana actually, she educated me in the last year by raising so many questions. Even sometimes when she raises some question, I'm having some doubt, but anyhow, I clarified that. And she is a master of questions. And I want everyone to involve. I want everyone to involve because whenever you raise so many questions, even I will also be equipped. Thank you, Sanjana. Holiday for agriculture loan and business closure and showing us running and quick mortality NPA. What is that? The loan is being sanctioned. After 3 months, they close the business. See, in one of the cases, they say that I've got the loan for the hardware business. Homer, the concern name is Homer, Homer. Because Homer means it includes all paint, all building materials, everything. But actually, they at the time of inspection, he has produced one software shop. The concern name is Homer. But after 3 months, he has closed a shop. But he is running the current account. He is running the cash credit account effectively. That means from the loan, he has invested the same thing in the real estate. It is called as fund diversion. But the manager, on seeing the transaction, he is very much satisfied that, okay, the account is regular. When the account is regular, normally they won't go to the parties. So it's a quick mortality. It will be called as quick mortality. Actually, you have to treat that account as NPA because the business is closed. So this is another thing you have to remember while the time of calculating NPA. Next one is insolvent of the guarantor. The guarantor is there. A guarantor has become insolvent. That will not make the account as NPA. This point you have to bear in mind. Because A and B are there. C is standing as a guarantor and the guarantor has become insolvent. That will not make the account as NPA. This is also another important point. Next one is auction by government. It is not known to the bankers. Now bankers have got the first charge as per the Supreme Court. So previously, before Supreme Court decision, and the first charge goes to the government. The bankers, they have got the collateral security and they have given the loan. But for tax attachment, the government has auctioned that property. The process goes to the government. But the bankers, they don't know the auction that has been conducted by the bankers. Then what is the position that bankers are at loss? But Supreme Court has clearly said, if the charge has already been created by the bankers, then the first charge goes to the banker and not to the government. So this is a very, very important thing. So if they say that no, the property is being auctioned by government, they are violating Supreme Court decision. This point you have to bear in mind. And the next one is willful defaulter, the person who has got the money but he has never refused to, he never wanted to make the payment. He is called as willful defaulter. And for fraudulent transaction, that point we'll give, we will deal in the afternoon. But anyhow, all the fraudulent transactions, directly you can classify that account as NPA. Blacklist customers, who are all called blacklist customers. These blacklist customers have been notified by the Reserve Bank of India for the fraudulent activity which they have done against the bank, against the RBI, against the government. Everyone it is being listed as the blacklist customer. And whenever you go to the bank and you want to verify the blacklist customers, because they have got access to the RBI site to find the blacklist customers. So this is when any customer is there, even the bankers, they won't sanction for the loan for the bank list customers. Delay in stock statement submission, NPA. And here, last year, you have to ask for the last year NPA statement, this year NPA statement, compare it. So this work you can give to the staff. Last year, the account is started as substandard. And this year, if they are not included that item in the NPA, then you have to go and verify the account, what happened. And if there is nothing is there, but simply they omit the entry, Last year it is substandard, now it is treated as D1. So to avoid that, to avoid NPA, the bankers, they are using this technique. So last year NPA statement you have to ask, this year NPA statement you have to ask, compare it, and if it is substandard, D1. D1 means D2. And D1 is here, current year there is no NPA, that means you have to go and verify the accounts, whether all the dues have been paid by the customer into the account. So last year NPA reversed without evidence, and last year NPA classification not changed. This is also another technique. Last year substandard, this year also they are putting it that substandard. That is wrong. So this is also another additional work. This you can, if you find this, you have to put it in the MOC. Last year NPA, last year D1, this year also they put D2. Suppose last year D3, you can put it as D3. That is common, because after D3, no downgrading is possible. So this is also another important thing that you have to take note of it. Cash entries NPA, sometimes if there is any entry in cash entries in NPA, you have to verify are those entries are genuine or not. Education loans, everything depends on the sanction letter, and schedule of NPA wrongly entered. Suppose instead of priority sector, they put it in non-priority sector also, thereby they are wrongly doing it. So schedule of NPA you have to verify. And SBOD also, suppose if there is any OD in SB or any OD in current account, and you have to see whether NPA principles are not here. For this, why I put the SBOD, it is my personal experience, and it has happened in one of the private sector banks. The branch manager has sanctioned OD in SB account, and it was more than 120 days. More than 120 days, the SBOD was not being paid by the party. But on April 7th, the party has paid the entire amount. He has closed the SB. So you are going audit for the year ending 31/3, say for example 21, 31/3/21. But at the time of classification, I found that the loan was closed, that is SB account was closed after 31st March. And since there was no SBOD, I have said that this is a standard account, but the same thing I have clearly mentioned in my LFAR, saying that I have considered events occurring after date of balance sheet. There is no SB account, so there is no need to make the provision. Since the account is closed, because events occurring after the date of balance sheet concept, I consider. But the RBI has given notice to me, why you are not classified. So I have given the explanation, and I already said that the same thing I have already reported in LFAR, then they dropped the proceedings. So that is why I said, for the wrong classification or non-classification of NPA, you will get notice from RBI. So that's why I put this. Still, I remember that case. And next one is housing loan, holiday period interest. If it is not considered, then that account will become NPA. Forex bills, if it is not realized on time, then you can you have to crystallize the bill, and you have to adopt after crystallization, the payment has to be done by the party within days, otherwise that account will be treated as NPA. Account transferred to collection agent. They say that, sir, this work I have given to the collection agent, so it is not the bank's responsibility. But advance figure will be there in your account. They say that collection proceedings have been handed to the collection agent. They say that no, we are going to give commission to the collection agent, so we will not in a position to include the same in the substandard category or NPA category. If they say report like this, then that is not acceptable. You have to classify that account as NPA. So this is also another technique they are adopting, transferring. They say that we have transferred the account to the collection agent, and transfer from one branch to another branch, even state to state. So this is also my experience. So I have gone for one bank, and in that bank, I saw that the loan was transferred from another branch in the month of February, say for example, February 2022, for example. The loan is transferred from one branch of X bank to the same branch on say February, in the month of February, the branch has transferred. Then I asked about the previous transaction of that branch. It is not a takeover. If it is a takeover, you need not bother. When they transfer the money from one branch to another, So I asked him, so what about the other state? What about the transaction at the other branch? So when I go to the other branch transaction, I noticed that there was no credit into the account, but for the same month of February 21, now this year, February 22, they have transferred. Last year, in the same month of February 21, they have transferred the fund from Bangalore, say Bangalore Whitefield. So I asked that statement also. There also they found that for that Whitefield branch of that is at Karnataka, they have transferred from say electronics. From Electronic City is the original sanction. So February 22, 21, 2019. February 19, they have transferred the money from Electronic City to Whitefield. 20, they have transferred the money, they have transferred the fund from Electronic City to say Mount Road branch. Then on 21 or say 22, February 22, they transferred say 22 at Salem, 21 at Mount Road, they transferred, and 22, 21, 20, they transferred from Whitefield, 19, they transferred from the Electronic City. See, in all those days, I found that there is no credit into the account. So, how you are doing the NPA? When you are going and doing the NPA, you see that when there is no outstanding, you need not bother with NPA. Say to avoid NPA, what they did, they transferred the account from one branch to another, and that too from state to state. So I went for 22-year audit. For example, I went for the 2022 audits. When I found and when I traced that no transaction was there at the branch. When I further probed, I came to know that the loan belonged to one of the directors of the branch. And I got a lot of pressure. No, you are even we'll remove it, sir. Tomorrow also we'll remove this to the other branch. I said, no, I will not. I'm going to classify this account as NPA. So, and what is the NPA cutoff date? Any due sanction on or after 1/1/2022, you need not bother. Everything you are to treat it as standard. They followed this concept. So in the month of February, they transfer. So you are going for the audit of this branch. You say that there is no outstanding, so you need not bother. Next auditor say that, sir, the amount has come, the account has come only after 1/1/22, 1st January. So I have not classified that account as substandard. So this is also another technique they have adopted. So transfer from one branch to another and state to state. So whenever you are going for audit and if you find any transaction like that, you have to probe for that. Next one is Npa Due Date Ratio. Okay, this I'm going to skip it. And here I want to say about the Npa pressure. Don't yield to any pressure because you have to save your certificate. The pressure you may be receiving from the branch manager, regional office, as zonal office, or head office, or even sometimes from the customer. Types of MOC like MOC based on NPA, MOC on profit or loss, or any other MOC. There are three things. Yeah, you are correct, Joseph sir. You have to pass MOC, but it depends on the nature of the transaction, based on whether it affects the profit, whether it affects the asset. Based on that, you have to classify. Pressure given by, so the main concept is don't yield to any pressure given by the head office or regional office or branch manager. Because you have to save a certificate and report without hesitation. Don't worry at all. You have to report. You will not be removed from the audit. And there are a lot of case studies. Case studies I have got even when I say a lot of, I can say a lot of case studies, but for one time, in the personal thing I'll share. But there are a lot of case studies you can do it. Here, for alive account, you have to do the NPA. For SARFAESI account, you can do the NPA because under SARFAESI, under section 30, issued only when an account is being identified as NPA. So you have to see whether that account is really NPA or not. That is also another work that you have to carry out. And fraud account, if you found any fraud account, that you have to transfer that to NPA, and all the classified as NPA accounts. So last year NPA, this year NPA, you have to compare it and you have to redo the working. Now I'm stopping with the NPA thing. Now I'm moving to the next part of the presentation, that is on the advances and this is going to be a very, very interesting thing, and I'm going to explain all the importance of advances, because based on that you are see NPA classification is okay, but whether it's a real advance or not, and what are the basic things that you have to consider for advances, and this presentation will be useful to your practice also, because you need not bother about the bank, bank audit, even you can practice on advances. So I'm going with the depth. Are you able to see this PPT, sir? Advances checklist including BG and LC. Are you able to see? Okay, just wait. Yeah, well, just wait. Now, are you able to see now? Yeah. Thank you, Ati. Advances checklist including bank guarantee and LC. So I need your immediate attention, because this is going to be your practice, and this is also the base for your audit also. So I'm going from the basic. So here, before going to the session, I want to ask you the question: what is the difference between loans and advances? You can put it in the chat box. What is the difference between loans and advances? Now you forget NPA, come out of the concept called advances. What is the difference between loans and advances? Yeah, loan is a liability and advance is an asset. Say loan, the bankers, they are giving loan, they are giving some loan to you, Vijay sir. Is it an asset for the bank or is it a liability to the bank? For you, it is a liability. For the bankers, it is an asset. So loan is a liability. It is also an asset. Advance is also an asset, Vijay sir. Now you have to see from the banker's angle, not from your angle. I will go with the presentation straight away. So these are the things. With reference to duration, loans means is a long term, normally more than 1 year. It is that I think currents are correct, and advances are for short term. And the purpose is to create the asset. Loan is for the purpose to create the asset, and advances it is to meet some expenditure. What is the interest rate? Interest rate is there for the loans, and it has been fixed by head office, and for advances it is no. For the adjustment, the loan can be adjusted, and it can be adjusted to meet, and even can be adjusted to get some machinery. So release the loan for some purpose. For the it can be adjusted towards some expenditure or loans. So advances can be adjusted towards loan or towards expenditure also. With reference to loans, you have got very lengthy sanction procedure, whereas it is comparatively less compared to the advances. And for the loans, document is a must one, and for advances, only less compliance is required. And for loans, it has got a full monetary value, whereas the advance, when compared to loan, so loan may be for 10 crores, for advance may be for 1. It is also having a monetary value, but when compared to loans, the monetary value will be less. And the payment duration is, it depends on the sanction letter. And with reference to advances, on achievement of the purpose, the payment has to be reversed by the branch. So this is a basic difference between loans and advances. Now I am going for the reading and understanding of the sanction letter. Read a sanction letter, and what are the important things that is there in the sanction letter that you should know, because you are going for the audit. You should know all the terms and conditions of the advances. And when you happen to see that they say that funded advance and non-funded advance, term loan and working capital loan, domestic business and export business. Please give an example. That is nothing but some staff would have gone for some training. For that training, they would have received some advance from the branch to meet the expenditure. After the training, the officer, they have to come and they have to submit the report to the branch saying that this is the advance I received, this is the amount of expenditure I have made, and this is the balance I will give it back. So to go and meet for some specific purpose. And sometimes they say that, sir, in order to buy the machinery, they are giving some advance. So based on 1 lakh advance, you transfer the machinery to the party and we will release you the remaining 9 lakhs. So a normal thing, advance is something, even you can say that rent advance is also an advance. So after you vacate, only after you vacate the house, the advance will be returned to you. It is not a loan. This is an example. Mostly internal. Yeah, Danny, you can take it as in that manner. It is called as internal. Yeah, you are absolutely correct. And loan, I mean, loans are also internal, but you are apt to the point. Actually, thanks for the apt word. And in my next presentation, I'll include this in my report, in my presentation, because it is advances is for the internal and loans is for both internal and external. We can add. Thank you for the exact word. And funded advance, non-funded advance, term loan and working capital loan, domestic and export business, and a secured loan, unsecured loan, primary security and collateral security, priority sector and non-priority sector. These are the terms, there is 6 terms they are using it in this sanction letter. Whenever you happen to see the sanction letter, you will find all this. So you should know the real meaning of this. Then only you will be in a position to do the audit. Even whenever you are, even this will be useful for your practice also. Now I am going with the funded advance and non-funded advance. What is a funded advance? Funded advance means whenever the bank releases the loan, the flow, that is the cash goes to the account immediately. The fund from the bank, it goes to the party immediately. That is called as funded advance. And non-funded advance, the bank say that we are ready to give the money, but we are ready to stand as guarantor to you, but we will make the payment only when the agreement is not fulfilled. That is, there is no immediate outflow of non-funded advance, immediate outflow of fund in the account, that is called as non-funded advance. So here, funded advance, we can say cash flow goes to the account of the borrower immediately, and for business development and term loan, working capital loan, consumer loan, all are coming under the category of. And with reference to non-funded advance, there is no immediate outflow, but goes later on invocation or others. Suppose on non-fulfillment of the thing, fund, the bankers, they have to make the commitment and they have to debit the party and release the fund. So from the date they release from the non-funded to funded, then the party has to pay the interest. For the non-funded amount, there no interest has to be paid. And a non-funded will be in the form of LC, bank guarantee, and industry. Is it clear, sir? This is the difference between funded and non-funded. Is it clear? Okay. I think manager members, is it clear the difference between funded and non-funded? Can I go to the next thing? So, okay, Sanjana said, yes, I am very happy. It's the difference between funded and non-funded. And next one is term loan and working capital. In term loan, asset will also be created. In working capital also, asset will be created. In term loan, you can create the capital asset. Working capital, it is called as revenue assets. So in term loan, what are the term loans that they can transfer? They sanction the loan towards. You can participate in the chat box, sir, because you can type what are all the items the bankers they are sanctioning as term loan. You can put it in the chat box. One is in the form of housing loan, And the second one is in the name of plant and machinery. And yeah, correct, you are correct. And third one is in the name of factory constructions. Other than that, what are the other term loans the bankers they can sanction? Housing loan, plant and machinery, factory building. Other than that, is there any term loan that the bankers they sanction? Vehicle loan. Vehicle loan will also be there. And for the working capital, what are the working capital loan? The banker has sanctioned cash credit loan. What purpose they use it? They use it for stock and debt. So here it's a list. Term loan is there to create the capital asset. You can buy machinery, land and building, housing loan, and other loans. Other loan includes vehicle loan also. But for cash credit, it is called as working capital loan, and you can use it for day-to-day operation, because cash credit loan is being sanctioned for the day-to-day operation. What are the items that can be considered as CC or ODS? PCL, packing credit loan, bill discounting, cash credit loan, and OD. This is all coming under the category of CC. Is it clear, sir? This is the difference between term loan and the CC. Next item is domestic business and export business. That is foreign business loan. That is, a bank can sanction the loan which has to be utilized within, to be used within India. All are coming under the category of domestic business loan. If they sanction the loan to be utilized for the export and import business, they are coming under the category of foreign business loans. Sanctioned within India, and it can use it for the to develop the business in India. Term loan, CC, OD, bill discounting, and others are all coming under the category of domestic loan. Here, with reference to foreign loan, you can use it. You can use it for packing credit loan, foreign bill purchase, or foreign bill discounting, and LC, letter of credit. And next one is secure loan and unsecured. What is a secure loan? That means if the party is giving some collateral security, or if any asset is being is being supported by some primary security. Collateral security is the security given by the additional property other than the primary security. Immovable, it may be in the form of immovable property, it may be in the form of movable property also. So what are all coming under the movable property? It is LIC policy, fixed deposit receipt, and vehicle also coming under the category of movable property. And immovable property, it may be in the form of land and building. So if those properties have been given towards the security of the loan, that is coming under the category of secure loan. And there is no security, but the bankers, they are giving the loan to the party, then they are classified under the category of unsecured loan. That is sanctioned in the form of security, that is primary security and collateral security. And unsecured loan is, though there is no security, you can use it for any purpose, but in secured loan, you have to use it only for the purpose for which the loan is sanctioned. For unsecured loan, it's a personal loan, so you can use it for any other purpose. So this is the difference between the secure loan and unsecured loan. Other terms of sanction that you have to know is primary security and collateral security. The primary security is the security. Here, what is the difference between primary security and collateral security? I want to say primary security is a security which the party has created, has made out of the loans borrowed. That is, the bankers, they have given the loan. Based on that loan, some security is being created. So any property, any security which has been created out of bank fund is called as primary security. And collateral security, this is not directly related to loan, but this will be a support to the loan. And the party, in order to get the loan, they gave their own property. So that will be in the form of land and building. So that is called as collateral security. So we will go. The primary security is the asset creation out of sanction, and stock and debtors and fixed assets. And in addition to the primary security, Collateral securities, it is an addition to the primary security, and it is movable and immovable, and it can be on the borrower's name or in the name of anyone. So this is the difference between the primary security and collateral security. Now, next one is priority sector and non-priority sector. Here, the government is giving importance to sanction the loan to the priority sector. That is all industry based, all MSME based, all agriculture based, all educational based. Because they say that when the bankers, they give the loan to these priority sectors, then automatically the business has developed, automatically employment generation will be developed, automatically the country's development will also develop. So the bankers, they are giving importance to the priority sectors, and you will be getting some concession in interest rate also. But non-priority sector, it is not that much of priority. It will not have a direct hold in the business development. But let us take gold, bullion. Jewelry is coming under the category of priority, but pure gold or bullion, real estate are all coming under the non-priority sector. So for the priority sector, the loan will be sanctioned by the manager based on the discretionary powers. But non-priority, the manager has got no power to sanction the loan, but the loan has to be sanctioned by the next authority. So can you say what are the items that, other than that, what I have purposely omitted one thing. That account has to be treated as priority sector as per the Udayam registration, that is MSME registration. That account they have included. What is that account? That has to be treated as priority sector. I think you got experience on it. Machinery, MSME okay, agriculture okay. Yeah, Aarti, you are correct. MSME okay. Then what are the items that the government has included in priority sector according to you? Please participate in the presentation. MSME correct? Yeah, education loans. Yeah, you are correct. Housing loans are also coming into the priority sector. Agriculture advances are also coming into the priority sector. Other than that, what is it? Any guess? Traders. Traders are also coming under the priority sector. They have included. Yeah, gold loan, sir. Gold loan, yeah, that is also coming under priority sector. You have gold loan, all loans. But for jewelry, gold loans is nothing but jewelry loan. But there is no loan for the bullion. So priority sector and non-priority sector. I'll go to the list. Here identified as by government and banks as industries, agriculture, transport, housing, education loans, retail, and other loans, which has been identified by government and banks. Other than the priority is called as non-priority. For now, getting non-priority loan, interest rate will be high. And also, it is not easy to get the loan. So this is the difference between priority sector and non-priority sector. And here, since I said about Udayam registration, I want to say a very, very important thing to you. One is, previously, they say that it is called as SSI certificate, small scale industry certificate. Now, after that, they replace as EM registration, that is Entrepreneur Memorandum Registration. And next, they replace as Udyogadar registration. And now the central government has introduced a concept called Udayam registration, UDYAM registration, Udayam registration. And and they say that all the existing SSI, EM, and Udyogadar registration has to be, all these have to be changed and to be registered under Udayam registration as a fresh one, UDYAM. This they have to complete on or before 31/3/2022. That is before 31/3/22, we are doing service. Even we can get our name registered under Udayam registration. So even I have got some registration in my name. I have to convert because I have got the entrepreneur memorandum. Sorry, Udyogada registration. I have to convert that into Udayam registration. And in SSI, they included only industries. In EM also, they included only the industries. But in Udyogada, they included the traders. But when the government has introduced Udayam registration, they consider only the industries and not the traders. Now they have included that now all the traders are part of Udayam registration. So this I have given for your general purpose. So Udayam registration is a must. This thing you have to verify during the audit. And if they say that, sir, your unit is classified as priority sector, where is Udayam registration? Without Udayam registration, without SSI, without EM registration, entrepreneur memorandum registration, without Udyogada registration, you are not supposed to classify that account as priority sector. So when you are not able to classify that account as priority sector, you have to pay the high interest. So this is also another important thing that you have to go through at the time of audit. Here, this is a difference, so I explained. Is there any doubt with reference to all this? Funded, non-funded, term loan, working capital. Next one is domestic and forex, priority sector and non-priority sector, primary security and collateral security. All this you can find from this section. So that's why I explained the importance of that. If you got any doubt up to this, you can ask. Now going to the another thing, who are eligible to get the loan. Individual is not it should not be a minor, and firm a registered one. So here it's a very, very important thing, and you should know a registered firm only is eligible to get the loan from the bank. That means the firm should have got the certificate from the registrar of firms. In Tamil Nadu, the registrar of firm certificate is valid only for every year. That form should be renewed. I don't know about the other state, but it is there in every year they have to do the registration. The logic is the bank they have to deal only with the registered body and not with the unregistered body. Because the bank, whenever they want to recover the amount, and they have to file the case before court of law, and only when the firm is registered, then they have to they can file the case. So during the audit, you have to see the bank would have got the firm registration certificate, and you have to insist for the renewal certificate of that firm. Otherwise, that firm has to be treated as unregistered. And MKV sir asked, is it required for all business loan? Yes, sir. MKV sir, it is required for Udayam registration. Is required for all business, all trade business, all SSI industries. If it's a big industry, there is no need. Because they have given the chart, that chart I will explain. For those industries, you require the Udayam registration. For all trade business, you require Udayam registration. So registration of the firm is a must one. And another one is company and LLP. You can they are eligible to get the loan from bank, IOP and body of individual, HEF. And here, if HEF is eligible to get the loan, but Supreme Court has ruled in one of the cases that if HEF is a partner in a firm, that partner firm is not eligible to get the loan. There are 3 life partners and 1 HEF is a partner, then that firm is not eligible to get the loan from. This is stated in one of these Supreme Court cases. So HEF, trust, society, all are eligible to get the loan. So fast, overall ineligible to get the loan. Person, willful defaulters, Npa customers, and high check returns. Suppose if any party has returned a huge volume of checks, this has to be these bankers, they will not renew the loan because of high check return. Next one is CIBIL. If the CIBIL says the score is 550, the bankers, they will not consider. If the CIBIL score says 650 and above, it depends on the bank's policy. The borrower is eligible to get the loan. The criminal. Now, the bankers, few bankers, they already started to do this exercise. And if any borrower wants to get a loan from the bank, the bankers, they say that, sir, please go to the police station and get a record about it. There is no case you can get a no objection from the no objection. It's a no criminal record that is that against your name. For that, you have to get a certificate from the police department. So this is the latest thing that they have added. So criminals and minors are not eligible to get the loan. And here there are some restricted borrowers. Loan to relatives or directors, they will not give. That is 5. If they want to sanction the loans to the directors, board approval is required. And if the loan exceeds 25 lakhs and directors of other bank as well as the firm which he has got substantial interest, that is your bank is sanctioning the loan to the director of the other bank. If the loan exceeds 25 lakhs, then you have to get the board approval, then only loan will be sanctioned. Against the partly paid shares, no loan will be sanctioned. Loan against NSC, NSS can be sanctioned by way of lien marking. With lien marking, they can sanction the loan. Other banks FD also you can get the loan. Against the other bank FD also you can get the loan, but a lien has to be marked in the other banks. At the other banks also you can mark the lien. This is another thing that you have to take care. Shares and debentures, yes, loan against the shares and debentures can be sanctioned by the branch, but the lien has to be marked at the other branch. And the partnership firms where HUF is a partner, they are not eligible to get the loan. This I have already explained to you. And now a new customer comes. Here I will tell the real situation, how your loan is being sanctioned by the bank. A new customer went to the branch. He asked the manager, sir, I want the loan. Immediately the manager asked you, sir, can you produce the KYC now? All your KYC. His PAN card, Aadhaar card, and other passport, everything. Then immediately the manager, he will take CIBIL report against that part. If the CIBIL report is satisfactory, he will proceed. Otherwise, he say that no, sir, your CIBIL report is not satisfactory. We will not give. So what is the auditor's duty? Whether the branch has taken the CIBIL report or not, that point you have to see. It's the first thing. And I use the word KYC. So all the KYCs have to be submitted by the party to the bank. Okay, that means you have to ask for the KYC also. You have to verify all those things. Now the manager say that, okay, I'll come and visit your unit. Then he has visited the unit and he was very much satisfied. Okay, I'm ready to sanction the loan. Here, you have to verify the inspection register. Yes, manager has to go to the party and he has to verify. Now, then the application is being handed over by the branch manager to the party. The manager, the party has to fulfill all columns and he has to submit the loan proposal along with the covering letter, then application letter. Then he has to submit 3 years in PAN card, Aadhaar card, passport copy, and for the residential proof, for the rented thing, everything he has to produce. Next one is he has to produce the income tax records and projections, CMA, and everything to the manager. And what are some other government registrations required? That also he has to produce to the manager. On receipt of the same, the manager, he will prepare a process note. In this process note, he has to give all the details as per the prescribed format of the head office. And he is not a blacklisted customer, he is not a fraudulent person, he is not an NPA customer. Everything he will report in the process note. And here I want to tell a very important thing. It's a professional opportunity available to the chartered accountant that few bankers, they give this process note work to the chartered accountants. I used to get some files from the banks. They pay me some 5,000 or 10,000. Normally, if I am receiving some 10 files, say if it is 5,000 into 10 files, it works out to 50,000 rupees. This work also you can outsource from the manager. And after processing note, the manager has to sanction the loan. Then the party has to come and accept the sanction terms and the conditions of the loan. This is a step based on which they are sanctioning the loan. Now, coming to the subject, new customer has asked the come and ask for the loan. Manager, he will ask for the KYC and he will take the CIBIL. Then based on that, he will go for the inspection. After satisfied, he asks the party to submit. And manager asks for the KYC. What are all coming under the KYC? Individual, for partners, directors, trustees, PAN card, Aadhaar card, passport, driving license, signature attested by present bankers. What is it? Sometimes you are in Kerala, you want to do the business at Hyderabad. The Hyderabad manager say that, no, I don't know you. So you have to get the signature attested. Signature attested by the present bankers. By the next one is for proof of residence. What are the things that you have to produce for proof of residence? Is telephone bill, EB, property tax receipt, and if it is rented, rent agreement. And proof of address, same thing, address, rent agreement, EB, and property tax receipt standing in the name of the landlord, identity of the property owner, everything that you have to do. This is about the KYC. Then, what are the other registered documents? In case of partnership form, you have to give the partnership deed and the firm registration certificate. In case of company, you have to submit. That is, these are the things that you have to verify in the file. So whether the party has submitted all these details, because you are going to verify the advances. They say that it's a limited company, but no ROC certificate is available for your verification. Can you say that it's a limited company? No. So you have to verify the ROC certificate also. You have to verify the MOA and the AOA. And in case of trust deed, you have to verify the trust deed. For society, you have to verify the bylaws of the society. And what are the other government registrations that is required to be enclosed along with the application? This is also very, very important. And the foremost thing is you have to see the validity and to which person it is issued. Because sometimes there will be some understanding between A and B. So A certificate will be used by B and B is getting the loan. So that means the B has got no validity certificate because the certificate is standing in the name of A. And the validity, that is a certificate, a factory license, for example, it is valid for a period of 1 year or 2 years. So beyond that, they have to renew it. So that is the validity of the period and the person to which it has been issued, that also you have to see during the audit. Charge creation in the case of company loans, what to be checked, sir? Immediately on sanction of loan, within 30 days from the date of sanction, charge has to be created by the borrower in favor of the bank before the ROC. They have to enclose all the sanction letter, all the that is bankers, they will give all the sanction letter details as well as the primary security details, collateral security details, and they have to create the charge in favor of the bank within 30 days from the date of sanction. From the date of sanction, charge has to be created. But the part, if any charge is not created by the party and the ROC can condone the delay for another period of 30 days by paying the fee. And beyond that, there is nothing is mentioned in the Companies Act of 2013, because within 60 days, charge has to be created. Without paying additional fee, by paying regular fee, you can create a charge within 30 days. Beyond that, next delay can be controlled only for 30 days. And beyond that, there is no provision in Companies Act to condone the delay of the Companies Act for the charge creation. So you have to file the sanction letter before the ROC. Name of the charge creation document. Name of the charge creation of the, what's it? See, the loan is whatever be the loan that has been sanctioned by the manager. If the loan is sanctioned against movable property, the loan is sanctioned against immovable property, everything has to be recorded before the ROC. That's a simple thing. And I said about the days. PAN card, you have to see there is no validity. It is a permanent validity for PAN card of firm, company, trust, society, individual. And for Udyoga Aadhar certificate, now it is Udyam registration certificate. Udyam registration certificate has already explained to you. And GST registration certificate, it is permanent. And you have to see whether the GST is in operation, say certificate is in operation or not. In case if you have not filed the returns, automatically your GST certificate registration certificate will get cancelled. And factory license, this also you can practice because there are only less persons available to practice in factory license. So you can help the party to get the factory license. You can charge some 10,000 rupees or 15,000 rupees. And this factory license is valid for a period of 1 year or 2 years. Pollution board clearance certificate, yeah, it has got the validity of up to 3 years or 1 year, depends on the nature of the business. There also you can practice. There are only less persons available to practice in pollution board clearance certificate. You have to see whether the pollution clearance certificate is in order. That is, there's a validity period is there during your loan verification. And PF registration certificate you have to verify, and the labor loss registration certificate also you have to verify. And ESA registration certificate you have to verify. Gratuity registration certificate also you have to verify. And import and export code, here I want this, I think you can, I think import and export code. This you have to obtain from DGFT. Here I want to tell a professional opportunity available to the chartered accountant, because if even I noticed from my experience, only few chartered accountants they are doing the IE code verification. That is, they are doing practice in export business or import business, and that's a separate course called import. And you go to the DGFT site, Director General of Foreign Trade site. There type import and export procedures course. You type import and export procedures course, and the cost for registration is 0. Cost for registration is 0. But for examination, you have to pay something around 1,500 or 2,000 rupees. There are some 40 models are there in the IE code, import and export procedures course. If you master it, then you know all the rules and regulations of the exports, and you can do the practice. This is also another information I want to pass. So as an auditor, in advances, you have to verify the IE code, whether the party has produced the IE code or not. In that IE code, you have to see whether the IE code belongs to him or to the HO. See, in one of my cases, it's my personal client. See, he has got the loan in HO status, but when he produced the same for the to the bank, he has given the IE code in individual status. So this has happened some 20 years back. For the last 20 years, they are doing the export of business by using only that IE code. That is individual IE code. But the transactions they are doing in HO. So that also you have to verify. And SEBI permission is required for the shares, and approval of technical and is there any technical foreign collaboration agreement? If it is that, then that you have to read. ITDC certificate in case of hotel. Suppose if anybody wants to start a hotel, they have to produce the ITDC certificate. Approval from local authorities, because you have to run the show only on the approved property, because Supreme Court has already cleared has already said that the loan has to be sanctioned only based on the approved properties. So approval from the local authorities have been obtained or not, that you have to see. In case of pharmaceutical industry, license from the drug controller is required. In case of sugar industry, get the permission from and certificate from a directorate of explosives. Here I want to share a very good case and a very big case which has happened in my practice. So this has happened. I noticed in one of the statutory auditor that the explosive license has already expired some 2 years back. When I discuss this with the branch manager, say that, sir, the party has applied for explosive license, but they are not able to get it due to some political pressure or due to some other reason, or they say that, sir, the cost of getting the explosive license is more. Even it may run into some 50 lakhs. So they are not, it's a word that they are given, but I don't know the cost. Maybe some extra amount they would have paid. They have to pay. They have to pay. Here, I reported the same thing in my report that the bankers, they have sanctioned the loan to the factory without getting the license renewed. So it is against the sanction terms and conditions. If anything goes wrong, then it will definitely create a big loss to the bank. And I went further and noticed that even the insurance company has not renewed the transaction because of the non-renewal of the explosive license. After 3 years, there was a big explosion at the factory, and almost all the building and the stocks have gone out. The loan they have sanctioned, it was around 35 crores. Now the bankers, they are not able to recover the full value of the loss because of non-existence of the insurance. And even the bankers, now they are facing the problem even from the RBI that why you are lend the money against the explosives unit which has got no license. So as an auditor, you have to observe whether the certificate of explosives, whether certificate of sugar industry has got the validity or not. This is an important thing I want to share. And what are the other certificates that you have to verify is permission from competent authority for discharge of effluent, that is pollution board, and permission from Directorate of Food and Civil Supplies in case of rice mill, solvent extraction. When they manufacture food products, simple are all the certificates should have got the validity within the validity period. And each and every business, the government department is there, they have to get the permission. In case permission is required, in case the promoter is not a citizen of India, this is also another thing that you have to take note of. Anyone in a non-resident can come and start the business in India, but can a foreigner can come and start the business in India? Yes, it is possible, provided they have to get the RBI permission. And license from the concerned authorities like village, panchayat, municipality to start the business. Whether the electricity connection is evident and connection available or not. This is a very, very important thing. Whether electricity connection is available or not. Because sometimes they say that you first get the electricity connection, then we will release the machinery loan. This is from the banker side. But when you go and approach the electricity department, what they say, first you install the machinery, then I will give the electricity. So which one comes first? It depends on the situation. As an auditor, you have to see whether that factory has got the electricity connection evidence or not. And then you have to give 3 years income tax returns. You have to file GST return for 1 year. That means all these things you have to verify while you scrutinize the accounts. Next thing is what you have to prepare the projected statement. That means projected statement in the form of provisional statement, project report for 3 years, and you have to prepare the CMA statement. CMA is a credit monetary analysis statement. That also you have to see whether the party has submitted the same. And then month-wise purchase and sales from the audited period. Suppose the audit period is 31/3/21. So if the loan is being sanctioned on the month of January, then the party has to give monthly statement of purchase and sales from April 21 to 31/12/21. So month-wise purchase and sales they have to submit. Even now, bankers they ask for you to submit the month-wise GST return. So these are the things that you have to verify, because you are going the audit and you are there to verify the advances. Whether these statements have been submitted by the you have to verify. And this is what I want to say about the enclosures. Is to get the loan, there are two another important thing. One is legal opinion. Next one is valuation. Here, I want to ask in this here, with reference to projected statement, I want to say one thing. You are not supposed to sign the provisional statement, projected statement, payment statement. Because as per our professional ethics, ethics code, you are not supposed to sign the provisional statement, projected statement, and CMS statement. That is, chartered accountant are not supposed to lend their names. But if it's even, you are not supposed to sign the acknowledgement. Yeah, fine. Or idea B. Someone say it is idea B, someone says that it is idea 5. And even the income computation statement. But they say that only when the accounts are audited, a chartered accountant can sign it. So a chartered accountant should not sign the unaudited statement, provisional statement, projected statement, CMS statement, and other things. So this point you have to bear in mind, because if you do this, then it's a violation of our Chartered Accountants Act of 1949. Now, I'm going to say few things on the legal opinion and valuation. Because only when you produce the legal opinion against your collateral security, only when you produce the valuation report against the collateral security, the bankers, they will consider the loan. In legal opinion, what are the highlights that you have to see? Is whether all columns have been filled. So here, as an auditor, what you have to do, you have to call for the legal opinion. You have to read the legal opinion from the top to bottom, and don't go to the last para that which says that the party has got the right to create the collateral, but don't go to that. But you have to read from bottom, and as an auditor, you have to see all columns have been filled by the party or not, by the advocate or not, that you have to see. Next one is read tracing of title. The advocate, they will give the tracing of title history. So you have to read all the tracing of title. If the advocate has mentioned any qualification in the tracing of the title, that also you have to see. You have to verify the documents discussed with EC entries. So if you apply for the encumbrance certificate for a period of 30 years, then what are the entries that are there in the encumbrance certificate should be discussed by the advocate in his legal opinion. And if there is any omission of the document that is there in the EC, and you have to go to the advocate and you have to see whether the same thing is being explained by the advocate or not. If there is any omission, or if the advocate has not discussed about the particular EC entry, then you have to observe the same thing, and you have to give that report, give that point in your report. Verified document discussed with the EC entries. Even I want to say to you that you should be a master in reading all the documents. And you go to the advocate, if he's a friend, you go to the advocate, your friend advocate, and ask him to produce the legal opinion that he has already given for other clients, and you go through it, and that way you will get a lot of knowledge from it. So you should be a master in reading the documents. Then MODT entries tallied with the items discussed in the legal opinion. So now MODT has to be created, and this has to be registered before registrar. Whatever stated in the legal opinion has to be included in the MODT. Suppose if there are 7 documents, only 6 documents have been mentioned in MODT. That means what happened to that 7? And if anything goes wrong, this 7th document is not enforceable before court of law. So MODT entries tallied with the items mentioned in the legal opinion, that also you have to see. Next one is legal opinion is permanent. It is valid till the additional property has been given. Every year, the party has to submit the encumbrance certificate to the bank. That is okay. But like in valuation report, a legal opinion is a permanent one. It is valid permanently. And after the legal opinion, the bank, they after sanction of the loan, they have to get the document. All these documents have to be vetted by another advocate and not by the person who has given the legal opinion. So vetting has to be done by another advocate. Few bankers now they started to give this work to the chartered accountant also. This is also another professional opportunity. You discuss this with your respective bankers, you can get the information. So vetting work has to be done by another advocate. And advocate appointment letter. Normally, the advocate appointment letter, you are not seeing it. Even the manager is not seeing it. So I recommend, even in few banks, they recommend, and I also recommend in my audit that the appointment letter of or advocate has to be enclosed, has to be attached along with the legal opinion. The purpose is the advocate appointment is valid for a period of 3 years, 4 years. It varies from bank to bank. So normally, even without getting the renewal of advocate license, advocate appointment, the advocates they started to give the opinion. So this is also another latest thing that they have included. You have to see the advocate appointment letter. And what are the areas in the title? Suppose we are verifying the title. What are the some items I have noticed? One is not kept under lock and key. The title deeds should be kept under the lock and key. A substack can take the title deed and he will come and hand over. That means those title deeds are not kept under the lock and key. This you can observe. Next one is last page is missing. Suppose in each and every title deed, suppose if they say that number of pages 12, but when you see the pages, you have got only 11 pages and 12th page may be missing. And if the 12th page is missing, the same has to be included by the advocate in his report. And not arranged as per the legal opinion. So whenever you ask for the title deed verification, the manager, he will come and hand over all the title deeds to you. But when you have to verify all the title deeds as per the legal opinion, it is not arranged as per the legal opinion. It may be misplaced, it may be interchanged, or sometimes it may be placed in some other file also. So it has not been arranged as per the legal opinion. This also you can take note. And latest EC has to be obtained. As per the rule, encumbrance certificate has to be taken by the banker every year. And at the time of your verification, if EC is not there, then that point you have to include in your. And MODT is not obtained. The party has created MODT, but MODT copy is not available for your verification. After getting the MODT, you have to once again take the fresh MOC, fresh encumbrance certificate to see that MODT entry is there in that EC also. So this is also another area that you have to see. That is, after creation of MODT, you have to take the encumbrance certificate. This point you have to take note of. So these are the 5 items that this only. There are some. You will be getting some lot of items other than this, but I highlighted only these 5 items because this I prepared based on my experience. But on seeing the title deed, even you can note anything. So next one is if you got any doubt in advocate, in legal opinion, you can ask here. I think members are very silent. Legal opinion, reading of legal opinion is a special technique. So what is MODT? Current sir, it's a memorandum of deposit of title. This is a registration of the registered document before the sub-registrar. So mortgage deed registration before the sub-registrar. In Tamil Nadu, it is called as memorandum of deposit of title deeds, and at some places they are calling that as mortgage deed. And in few states they say that MODT is not a must for that place, because in Tamil Nadu, when Madam Jayalalitha was the CM, she said that you can file the case before court of law only when you create the MODT, because MODT is giving revenue to the state. So this is the expansion of MODT, memorandum of deposit of title deeds. Any doubt? Okay, Karan sir. Anyone has got the doubt about the legal? Because it's a very, very serious place. You should know how to read the legal opinion. In my lifetime, I have read more than 4 lakh documents. More than 4 lakh documents. I don't remember because I've read more than 4 lakh documents. My passion is I can form legal opinion on my own because I know how to read the title deed. So you should cultivate that habit of reading the title deed. Sir, EC has to be obtained every year. Is it? Yes, Danny, you are correct. Every year the branch has to take the EC. The reason is there any entry there in the EC? Even the encumbrance certificate will be nil also. Okay, and if there is any entry in EC, that means without the knowledge of the banker, the borrower has got some loan from outside. For that, they want the encumbrance certificate. Next, I am moving to the valuation report. Simple logic, valuation has to be done. It has got a validity of 3 years. That is before end of the 3 years, once again, the valuation has to be done by the banker, and the valuation has to be done by the another valuer and not by the same valuer. He should be a chartered engineer. If it is for the immovable property, the valuation has to be obtained from the BE Civil. He is a chartered engineer. For the immovable property, the valuation has to be obtained from BE Civil. For the machines, for the valuing the machinery, you should have the qualification of BE Mechanical. So, a BE Civil cannot certify the valuation of the machinery. A BE Mechanical, he cannot certify the value of the immovable property. This point you have to see. After MOD, is it possible to obtain another loan? Yes, you can obtain, because it depends on the bank, Danny, and you can obtain, but you have to obtain from the same bank, and you cannot obtain from the other bank. So another value regarding valuation is all the columns of the valuation report have to be filled properly, because as per the Supreme Court decision, it is that the loan has to be given only by considering the property which has got the plan approval. But the valuer, in order to help the customers, what they will do, they simply leave the column blank. So that means you have to go through the entire valuation report carefully. So here they mention another important thing. I want to mention the date. Date of issuing the value is different. Date of visit is called as valuation date. So today he has visited. Tomorrow you would have given the valuation report. So what is the valuation date is today. So date of reporting has got no relevance with the valuation date. This point you have to bear in mind. One. And the second thing is, some valuers, what they do, they value the agricultural land in square feet. Agricultural land in square feet. So that is also totally wrong. And if they value the agricultural land in square feet, then the valuer, he has to call for the change of the status from agriculture to non-agriculture. And for that, they have to produce the revenue records to the valuer. Everything has to be taken note by the valuer. This is a highlight of the valuation. I'll go with the point. One is data visit and data valuation, that I said. Today he has visited, tomorrow he is giving the valuation. So on the data visit, this is the value. And even they say that now they are asked to affix the photo on the back side of the last page, they have to affix the photo for the unit. And even few valuers, what they do, they take the photo and they ask the owner of the land to stand, and they have to take the photo. Sometimes if the valuer went along with the branch manager or along with the officer, they ask the manager or officer to stand along with the owner of the land, and he will take the photo. And sometimes if a staff comes, he also stood there and he has taken the photo along with the manager and the owner. So this you can see from the photograph. So data visit and data valuation, and all columns are filled properly. No column should be left blank. Photos are affixed on the last. And the plan approval copy has to be obtained by the valuer, and he has to enclose along with this report. And valuation basis of arrival. What basis is the valuation? Is it how he has arrived at? That is, there are so many types. One is market value. Next one is forced sale value. Next one is guideline value. Now it is liquidation value. So the basis of arrival is these are kinds of valuation, and the basis is, even they say that at a flat rate they can value the property, and sometimes layer method. What is a layer method? So layer method you can find from the educational institution or for the factories, they are adopting the layer method. Layer method means on roadside up to some 100 feet, this is the rate. After that, this is the rate. After that, this is the rate, because the value will get reduced. So that is also called as layer method. These are what all topics are planned for today. Please guide. I think today, whatever left, I will cover, Pradal sir. And after this, I am going for the, there is a bank frauds topic, revenue leakage topic, and documents, there is records to be verified. And whatever left, whatever is there, I don't remember, but everything I have to cover. And just concentrate, because this is going to be not only useful for your practice, not only useful for the audit, it will be useful for your practice also. Kindly spare some time and attend to it. Because anyhow, I try to give the recorded version to you, but valuation basis of arrival, that has to be said. So this is called a layer method of valuation will also be there. And legal opinion is valid for 3 years, and fresh valuation has to be done by other engineer. After that, appointment letter of the valuer also you have to ask, because and valuer is allowed to value the property, say in Salem only. I am at Salem in Tamil Nadu. A valuer is appointed by the banker and he is asked to do the valuation only for the Salem district. He is not supposed to go and value the property which is situated at Bangalore, not at Hyderabad. So you have to see the appointment letter. What is, whether the appointment letter has got the validity or not, that also you have to verify. And this is what I want to say about the valuation. If I got any doubt here, you can ask me. Valuer. So here there are situations you cannot rely on the valuation, but you can refer the valuation, but you can also offer your comment about the valuation. You also offer your comment on the legal report also. If you're not satisfied, don't say that the legal opinion is wrong. The way of reporting is different. You can say that the following points have not been considered by the advocate. Don't say that the advocate is wrong, because we are here not to comment on the other professionals' capacity, but you can say that the following points have not been covered or have not been considered by the advocate or valuer while they gave the report. So the way of presentation also is very, very important. Next, so far, this is a base based on which you are submitting the application. Based on that, they are giving the opinion. Second, I think Subhanahu saw second valuation to be done by engineer who is different from first. Yeah, that is correct, sir. That is why I said point number 5. Yeah, fresh valuation has to be done by other engineer and not by the existing engineer. Can I move to the next thing? And next thing is very, very important. That is, I am going to touch the individual items of the loan. So far, we have submitted the application. The manager has sanctioned the loan. See, even I want to say one thing. Bank audit, it's an ocean. You can't get the depth of the bank audit. So you are moving in one direction, the thing may happen in another direction. Because you should be a master in banking rules and regulations, but they create some new rules and regulations. So you can get the success only, it is based on your experience. So next one is, I'm going to start with the jewel loan verification. Here, next the cash verification I already said. Now we are going for the jewel loan verification. What are the kinds of jewels? Agriculture and non-agricultural loans. You can give for the jewel loan. I am going line by line. Here, I want to tell the modus operandi of verifying the jewel packets. Because in statutory audit, you need not bother about the purity of the jewels. You need not bother about the purity of the jewels, but you have to verify the jewel packets. As per the RBI norms, the jewel packets jewelry should be kept in a transparent packet. But it is not there in most of the branches. They put that in a cloth bag, which is on seeing the cloth bag, you cannot find whether any jewelry is inside or not. Now, in statutory audit, you have to give a comment that I have physically counted the packets only. I will not verify the purity of the jewels because you will find no time at all. Now I will tell what is the mode of valuation. First thing, you have to ask for the jewelry loan quantity from the system. Jewelry loan quantity from the system. Let us take it is 758 loans. That is alive as on the date of verification. Go to the bank vault and there is one register called a jewel loan stock register. Jewel loan stock register. In that jewel loan stock register, you just see the quantity. If it is 758, okay. 758 is as per books. 758 is as per the real stock. You can do it. And sometimes the packet mentioned in the jewel stock register is 762. That means 4 packets may be more. Then you have to ask for the reason. The manager will definitely say that, sir, their legal has come and close the loan, and still we have to get the legal clearance. So they closed the loan, but we have not released the jewels. There is a dispute over the jewel loans, jewel packets. There is ownership of the jewels. There's a dispute. And sometimes the borrower has paid the money from abroad and he has still to come to India and has to receive the jewels. There will be some lot of reasons. So you have to ask for the reason, then you have to record everything in your report, say that the actual stock is 758. At the time of verification, I found 762. The following 4 packets, the following are the reasons. This you have to give a specific report. Now, 758 packets are there, 762 packets are there, you ignore that 4. But now you have to start count the jewel packets. What they are doing, if you depute this work to your staff, what they will do, so go and verify the jewel packet. What they will do, they just pull the tray, because each and every tray has got 100 packets. So for example, every tray has got the bin card system, and all the bin cards have to be recorded in a jewel ledger book per tray, and all this jewel ledger book has been written in the jewel stock register. So the stock that has been kept in that particular tray should tally with the bin card of that tray. Normally what you do, you count the packets, just 1, 2, 3, 4. So on the top of it, so on the top of it, you say that 1, 2, 3, 4, 5. You are doing very fast, but this should not be the case. I will tell the slogan of jewel loan verification. This also you can find in my YouTube. You have to touch the packet. You have to touch the packet. It takes less than a second. You have to touch the packet. Feel the packet, whether something is inside or not. Sense the packet, whether something is inside or not. Feel, is it a jewelry or not? Then count. Touch, sense, feel, and count. 1, 2, 3. When I did this exercise at a particular branch, I found that something is there inside the packet other than the jewelry. When I asked the manager, sir, can you open this? He said, no, you are there here to do the audit, to count the packets and not to open the packet. And my experience here, I want to say is, if anyone has objected to our audit procedures, then that means something is fishy. Then I requested the manager. He said, no, I will not open the packet. Then I informed the regional office that the manager is saying like that, and I asked you to please direct him to show me the packets by way of opening. Then they gave direction. No, you have to cooperate with the auditor. You have to show the packet open. When we opened the packet, I found that there's a small stone inside it, because to offset the value, offset the weight, that's a small stone inside. Then I said, sir, what is it? So, no, sir, I don't know what has happened. Okay, sir, maybe from some earlier manager, they would have done this. So I kept on. Then after counting some 7 packets, after verifying the same thing, again I found another type of item like this. Then I asked the manager to open this packet. He immediately said, no, the permission is being given to open only that packet and not this packet. Again, I called the regional manager. Then again, they say that no, whatever manager, whatever auditor say that we have to show. There also I found a stone. So in my test checking, I use the word test checking. I found some in 17 packets, there are small stones to offset the weight. This I have found out the concept called tax sense, feel, and count. So after that, I've narrated that as fraud and a lot of steps the head office they have taken. That's a different issue. But the slogan for verification of dual packet is tax sense, feel, and count. So you can count that packet slowly. And now I am going to the topic. You have to ask for the dual loan stock register and you have to see whether all the quantities have been tallied with the dual loan stock register. And here, the second one is appraisal appointment letter and his commission. Yeah, an appraiser is allowed to, is being given an appointment only for a period of 3 years. And you have to see that who is doing the appraiser work, because appraiser is an outsourcing person. Who is doing the appraisal? When you go to the rural branch, you can find that the son of the appraiser may be sitting as the appraiser. But the appraiser appointment is being given to the father. But sometimes the father, when he was not able to come to the branch, he has delegated that work to the son. And in the evening, he will come and sign all the papers. So this is also another thing that you have to take note of it. And you have to see the commission. Whether the commission is being paid by the banker or paid by the party. And if it is paid by the banker, it is okay. If it is being paid by the party directly to the appraiser account, and whether the actual commission recommended by the bank they has received or not. That point you have to see. Next one is dual loan circular you have to see, because sometimes per gram this is the rate, and whether the whether the appraiser has given the calculation, whether has recommended the dual loan correctly or not. Next one is you have to see agriculture and non-agriculture loan. For non-agriculture loan, the interest rate will be high. For agriculture loan, the interest rate will be less. And in agriculture also, they have issued a circular saying that up to 3 lakhs, no agricultural holding certificate is required. And if it is more than that, agricultural holding certificate has to be produced by the party to the banker. As an auditor, you have to see whether the agricultural holding certificate is being produced for the loans 3 lakhs and above. Sometimes what the party they do, for 2 lakhs they obtain the loan today. For tomorrow they came and they 1 second. Yeah. So today you would have obtained 2 lakhs. Tomorrow you would have obtained another 2 lakhs. What's the per borrower concept? If you club, it crossed 3 lakhs. So the say that the the limit is only below 3 lakhs. We are not in a position to give the holding certificate. We will not give the holding certificate. So that is wrong. So if the limit crossed 3 lakhs, it is a per borrower concept. It is not a per limit concept. So they have to produce the holding certificate. So this is a problem that you can face during the audit. And next point that you have to see in JUL is transparent packet is not available. So only cloth bags are available. And another thing is JUL loan closed paper. So please verify that JUL loan closed during the year. The concept is in one of the banks where at Pudukkottai where I gone for audit, I found that the borrower name borrower's signature is different, the recipient jewelry is different. And sometimes there is no signature at the closure place. So as an auditor, you have to see and satisfy yourself that the jewel loan borrower has himself come to the branch and he has got the jewelry back or not. So please include this point in your audit program, that verification of jewel loan closed paper. Out for this, up to that, then I will come how to treat TDS on jewel appraisers commission. Subara sir, the TDS on commission, if it is being paid by the bankers, then TDS has to be deducted. If it is being paid directly to the appraiser, no concept of TDS is applicable. Clear? If you debit P&L and make the payment, TDS has to be made. If the appraiser is receiving the TDS directly from the customer, and no, it is not the responsibility of the banker to deduct TDS. Clear, sir? Subara sir? And stamping of scale, that is payment scale, has to be done, stamping every year. You have to ask for the stamping certificate when the stamping has taken place. So if it is not, if it is produced, you have to verify whether the stamping dates are in order or not. Reappraisal evidence, because once in 3 months nowadays, and even I can say that in Bank of Maharashtra, I observed that once in 3 months, the reappraisal of the appraisal of the jewelry is being done by the other appraiser. They are following the principle once in a quarter, but differs from bank to bank. Because I am one of the customer of Bank of Maharashtra, I observed that the verification of jewelry has been done once in a quarter. So they are verifying the purity once in 3 months. So you have to see what's the reappraisal evidence. That also you have to consider during the audit. And agricultural land holding certificate, if it is not available, then you have to report. Because the limit, they say that up to 3 lakhs, this is the limit. And if the limit costs 3 lakhs, then the borrower has to submit the agricultural holding certificate. If the agricultural holding certificate is not produced for your verification, and then the same has to be included in your certificate. And per gram valuation is not available, but this you can find from the surplus. You can identify, because if they say that per gram it is 2,800, the appraiser is allowed to sanction only for 2,800. And if he is not supposed to give the per gram valuation to 3,200. So if there is any variation, that also you have to cover in your report. And if the jewel loan is released, is not signed at the time of discharge. So this I already said, you have to verify the jewel loan closed paper and you have to sign it. Jewel loan closed but not released, why? So that also I already said in the opening. Please, you have to inquire and you have to report it. What is the aggregate limit per borrower? So the aggregate limit per borrower, say if it is 5 lakhs. And if it should not, today you would have got the jewel loan of 3 lakhs, tomorrow you would have got the jewel loan of 1 lakh, and day after tomorrow you will come and get the another 3 lakhs. So the limit should not, overall limit should not exceed the aggregate limit fixed by the head office towards the jewel loan. And this is what I want to tell about agriculture, jewel loan. Here I want to add one more thing. I think I omitted here, but I want to, I thought it was included. You have to concern about the jewel auction details. We are not verifying the jewel auction register. There is one register called as jewel auction register. In that, the procedure is the party, after the due date, the branch, they have to inform the party that before this date, you have to come and close the jewel. Otherwise, we will auction your jewels and take back our money. So for that, the manager, they will prepare a list and they hand over the list to the regional office, and the regional office, they have to approve the list, and based on the approved list, they have to give the paper ad, and in the paper ad, they mention the date of the auction. And in the date of auction, the bank manager, they have to do the auction. Suppose if the party came to your branch and they close the loan, then it is fine. So those jewelries should not be auctioned. Here, Now you have to see the auction proceedings, all the auction proceedings that you should see, and who has participated in the auction, who has conducted the auction, everything that you have to carry out. You have to be very, very careful. And in one of my cases, old jewel loans closed by fresh gold loan. Yeah, that is permitted. That is permitted because they pay the interest and they close the jewelry. Because even I did the same thing because I am not able to pay the principal. What I did, I paid the interest and say that I want a fresh loan for it. They gave. It is permitted and it's a convention. It is not. Suppose if you avail some 2 lakhs, it is not possible for you to go and pay the 2 lakhs immediately. They say that, sir, I am ready to pay some 18,000 interest and kindly renew the loan. So the renewal is shifted to the next year. It is a normal convention. It is permitted one. All bankers, they are doing this. And in auction, in one of the branches I got for audit, I have got 2 sets of auction lists. See, the auction list, say for example, 10 lakhs is worth of jewelries have been auctioned. But when they give the credit into the account, he has given credit only to the tune of 8 lakhs. That means for 2 lakhs has been taken by the manager. It is a misappropriation and it's a fraud. This is the first case. So that is why I asked you to verify the jewel auction. Next is, in that auction, I noticed that jewelry, one customer jewelry has gone for 15,000 value. That is 10,000 is a loan, 15,000 is the auction amount. That is, this 5,000 is there in that particular party's account. In another case, other party, when they auction the jewelry, it has gone only for 8 lakhs. 8,000. This, what the manager did, the surplus of 5,000 of A party, they have adjusted against the deficit of B party. Is it permitted? It is not permitted. Because if there is any surplus in A's jewels, it has to be given credit to the A's account. And the deficit of 2,000 has to be recovered in other format from the jewel borrowing. But this should not be there. So this also you can find from the auction list. And third thing is, the manager has called the jewel auction. And what he did, he has opened the jewel packets and you see there's 2 bangles and 1 chain is there. And he has taken the 2 bangles, he has gone to a jewelry shop and he has sold the jewelry, he has sold the bangles on his own at the jewelry shop. And he has sold this chain at the other jewelry shop. Thereby he closed the account and saying that there is no surplus value. So in the auction, the list is there, but the jewelries have been sold by the manager in a person. So this also I have found it in my audit. And the thing is, actually I got the receipt of, I think the manager has forgotten and to remove the that is black auction voucher. That is the suspense voucher. He has forgotten to remove it. And during my audit, I caught that voucher. Then I probed it. When I probed it, all this has taken place. So I request the members, please verify the jewel auction procedures, jewel auction register. If I got any doubt with reference to jewels, you can ask me. Otherwise, I'll move to the other area. Okay. Now I am going to concentrate on the term loan study. Now I am going to discuss about the factory, land and building. A borrower has applied for the construction of factory, land and building. What are the points that he has to see is, with reference to land, you have to see whether it's an approved land or not. As an auditor, now you have to, whatever I'm saying that as an auditor, you have to see this. Is it an approved land? Whether the extent of land is required or not. Suppose it's a very big factory, but land is, whether the land space is sufficient or not, that also you have to decide. And classification as industrial land. What is this? Because when they purchase a land, the land will be in the, when you go to the document, and you can notice that all those documents are in agricultural category. But you are sanctioned loan for the industries. So the conversion of agriculture into industry land be approved by the revenue authorities and not by the village administrative officers. By the revenue tahsildar in Tamil Nadu, they are called as tahsildar, or we can say that head of the revenue authorities, they have to approve the conversion of land from agriculture to industry. So you have to take note of it, whether the classification as industrial land by the revenue authorities, that is there any certificate available or not, that you have to verify. Condition to which that land is allotted or purchased. Because sometimes the government may allot the land to a particular person. Whether it is suitable for the industry or not, that also you have to verify. Next one is license to start the factory in that land. That means the borrower has to get the factory license to start the factory in that land, as we specifically mentioned the certificate. So that also you have to verify. Next one is soil condition. For that, soil testing certificate should be produced. So you have to verify that certificate. Next one is land development cost. So you have got the land. For the land development, what is the cost? And for the formation of road, what is the cost? For that, you have to get your certificate from the engineer, chartered engineers. You have to get a specific certificate. Next one is it a freehold land or leasehold land? So a land can be given for 99 years of lease. That is called as leasehold land. And if it costs 99 years, then that is called as freehold land. So whether the land belongs to the party, whether the land belongs to the leaseholder. See, in Pondicherry, I noticed that the factory, that is the government industrial department, they have given the land under the lease basis only. But they want to get the loan. But when they approach the bank, they say that no, you are running the unit in a leasehold property. So we want additional collateral security other than this. So this is also a mess. And they say that even they say that, sir, we will get a no objection from the Pondicherry Industrial Department that we can take this land as security. And I said, no, it is not legally permitted because the land belongs to the government. You are acting only as leasehold property, and the leasehold property cannot be taken as security to the loan. So as an auditor, you have to see whether the security given by the party is a genuine one or is a freehold property, and it should not be a leasehold property. For each and every point, I can speak for another 10 minutes or 15 minutes, but I'm just touching the important point. For the leasehold, you have to see the lease agreement and what is the deposit amount that you have to see. And suitability of the land for the unit, availability of water, access, transfer facility, environment, possibility of getting power supply, everything you have to see. It should be there at the factory. And see whether that land can be mortgaged in favor of the bank. What is it? 11. Sometimes the land would have been allotted by the government to you. Suppose they have got the right to use the land and they have got no right to mortgage it. So you have to see the allotment letter. They say that so up to 30 years this land cannot be sold to anyone and you cannot create mortgage. There are so many conditions with reference to allotment of the land. So you have to see that point also. It is actually, it is a duty of the advocate he has to see. It is a duty of the valuer he has to see. It is a duty of the manager he has to see. But as an auditor also, it is our duty to verify whether the land can be mortgaged in favor of the bank or not. That also we have to verify. Next one is the scope for expansion. Suppose now you have started in a small scale and 1 second. Hello. And is there any scope for expansion? That also you have to see, because you have started the unit in 2000 square feet, and for expansion you want another 4000 square feet. is that land is available or not. That also you have to see. And now you are going for the building. In any building, the Supreme Court has already said that only the loan has to be given only to the approved property, approved building. So plan approved to construct the building, that is a foremost thing that you have to verify. Is there sufficient space to accommodate all those machineries? It's a factory building. And even another question, whether you have to install the machinery and construct the building, or whether you have to construct the building and install the machinery. That also you have to see. And the question is, sufficient space to accommodate the machineries should be there at the building. That also you have to see. And it is suitable for the machinery layer. What is machinery layer? Which machinery comes first? Because when you do the flow of the product, according to that, you have to install the machinery. A, B, C, D. And for each and everything, if you install the machinery at in a scattered manner, so you have to employ huge labor to carry the raw material from one place to another place. So it is suitable for the machinery layout. That also you have to see. Here I want to give a suggestion. You have to ask for the layout register. In my experience, I have found this layout register only in one industry. All others, they are not having the machinery layout register. Please ask for the machinery layout register. And you have to see that the land is suitable for the labor movement, because there's sufficient space to be available for the laborers to move from one machinery to another machinery, and even to walk in and around the factory. And all the infrastructures are available at the at the factory. Laborer. All the infrastructure facility, there is staff quarters should be there, toilet facility should be there, bath facility should be there, restroom has to be there, it has to be equipped with the TV, fridge, washing machine. So whether all the infrastructure facilities are available or not, that point also you have to see, and you have to give a report. It should be properly planned to house boiler, transformer, generating set, air compressor. There is sufficient space should be available to install a boiler, transformer, generator, etc. And you have to see the scope for future expansion. Now you have got you have constructed a very big building and you have installed only 7 machineries. And suppose if you want to install another 7 machineries, there should be sufficient space inside the building. So you have to see the future scope. And light and ventilation exist space as per the government requirement. And what is the estimate cost of construction? This has to be given by whom? This is a building. It has to be given by the BE Civil. And if anyone can give the estimated cost of construction, but if the party has submitted this estimated cost of construction to the branch manager, and the branch manager in turn they give this to his panel valuer, and they will vet the cost of construction, and the cost of construction which is vetted by the panel engineer, then the banker they consider to release the loan. An engineer and construction person to be verified. And who is going to construct the factory? And is it by engineer or is it by some building masonry or building person? That also you have to verify. Which one to be constructed first, or put the machinery and construct it? That's why I said whether we have to install the machinery or construct the building. Construct the building and put the machinery. This is equivalent to the other comment which I made. Whether we have to get the electricity first and install the machinery, or whether we have to get the machinery and get the electricity later. So that also you have to see. And total cost of the building, that has to be studied. What is the total cost of construction? Because based on which loan has been sanctioned, and the engineer has to give the completion certificate for the factory building. In that, what is the value that they have sent also has to be mentioned clearly by the engineer. This should tally with the proposal that the party has given to the banker. Any advance is being done, they say that, sir, we have made some advances to this party, it has to be paid only through account paying mode or check or RTGS or DD by the borrower. Normally, the bankers, they won't permit the cash payment receipt. So if you happen to see any cash payment receipt, That also you have to give your comment. On that also you have to give your comment. And property taxes, after construction of the property, then the property has to get the approval from the corporation or municipality or panchayat. And after that, they have to pass an assessment order that we are going to levy a house tax receipt to this extent. And the rule is the party has to produce the assessment order copy and house tax receipt to the bankers for its records. So as an auditor, you have to see, because the loan is given for the construction of the house building. So whether house tax receipt is being obtained from the government authorities or not, that point you have to see. Now I am going for the machinery. So far we discussed about the building, factory building. If you got any doubt for this, you can ask. Because all this you have to verify during the audit. Just turning the page, you can get it, but this is a checklist. You have to take note of it, and you can get. You have to verify this. Now I am moving to the machineries. What are the items that you have to see in the machinery? One is invoice, and first thing they say that you have to list the machineries. How many machineries are required? Full thing. It is machinery includes accessories, spares, and everything. So list of machineries you have to take. Corresponding quotation. Normally, whenever you want to buy a machinery, you have to give the original invoice from a particular party, and they require the corresponding quotation from the other parties to compare the cost of the machinery. And third one is quotation should be. The quotation produced by the parties have been verified by the managers. They went to the spot of their person who has given the quotation, and they have to satisfy that that person is capable of giving the quotation. That person is capable of producing the machineries, because they, in few cases, they believe that the customers have cheated the bank by giving the fabricated invoice. So in order to avoid that, what they do, they will go to the spot and they verify it. So this is also an interesting thing for you. So whenever you verify this, you have to see whether this type of verification is being done by the manager or not. So that quotation should contain the name and address, GST number of the machinery supplier, and date of quotation. What are the terms and conditions of supply? What is the description of the machineries that this company is going to give to you, and that has to be approved by the responsible person of that company. So with this, they have to submit the quotation. If any advance is being given, normally the bankers, they sanction 75% of the loan against the cost of the machinery. So 25% has to be made by the party to the banker. The party, in order to have, because they are not having funds, in order to buy the machinery, what they will do, they escalate the price of the machineries, and to the extent of escalation, they say that, sir, we have made the payment in the form of cash. And the other party, they also issue the dummy cash receipt. Dummy cash receipt. Normally bankers, they don't recognize the cash receipt produced by the party. Here, I want to give you a suggestion. Suppose if I got 1 lakh, but 4 lakhs have to be given as margin. What the few parties, what they are doing today, they are remitting 4 lakhs into the bank account, 1 lakh into the account. They transfer the fund to the supplier. They ask the supplier to give back that 1 lakh in cash. Again, tomorrow he will come and remit 1 lakh. Thereby, on 4 days, he proved that 4 lakh rupees in the form of advance is being transferred through account pay. This is also another technique, they are adopting it. So this also, at the time of verification of the accounts, you can do it. You have to satisfy yourself. Then correspondence with the capacity projection, install capacity and utilization capacity that you have to give. And if the machinery is taken on lease, then see the lease agreement. If it is cancelled, what will happen to the bank fund? Suppose your loan is being sanctioned based on the machinery lease. And suddenly the lease, based on the machinery lease, the bankers, they have sanctioned the loan. Suddenly, if the machinery lease is being cancelled, So what happened to the bankers? So the care is, if machinery is taken on lease, you have to go through the terms and conditions of the lease. And machinery operators or laborers are available. So machinery you are purchased, whether there are proper persons there to operate the machinery, or skilled persons are allowed are there to operate the machinery, and whether the laborers are available to help the operators to run the machinery. That also you have to see. Everything should be included in the project report. You have to see at the time of verification, if you want, if you are a content auditor, whenever you are going for verification, you have to consider all these points. And machinery service is available. You have purchased a machinery, but without service. Then it is not possible for the borrower to run the show, run the machinery. So you have to see whether the machinery service is available or not. Technically operated, whether those persons are applicable. Here I want to say one of the practical case. The machinery has been imported from Japan, and it's an auto loan. It's an auto loan. But there is no one to operate the machinery in India because it's a newly invented machine. And this party has purchased the machinery from Japan, and he has made the request, sir, you have to depute some of your staff to India for a period of 6 months, and they have to give training to the local fellows. And when they are clear, then you can recall that staff, and we will make all these staying arrangement, and also we will make the fees to them also, or salary to them also. So the technical operation should be known to the owner. Then he has to run the machinery only with the help of the staff, and that staff should also be technically equipped. So that point also you have to see in the machineries. And electricity to operate the machinery is available or not, whether it's a own electricity or you can operate the machinery through generator. That also you have to see. And fuel of the machinery, fuel for the machinery. If there is no electricity, then whether sufficient diesel is required or sufficient petrol is required to run the machinery or not. Whether the manufacturing of machinery is local or indigenous or imported. Whether it's a first-hand machinery or second-hand machinery also you have to see. So if it is an imported, you have to see the import order, and if it's locally available, you have to see the quotation, you have to satisfy yourself. And CGT-MSC insurance is paid or not. If any machinery is being sanctioned by any machinery loan is being sanctioned by the manager, if it is not covered by CGT-MSC, that is Credit Guarantee Fund Trust Scheme, then no, you need not bother because collateral security will be there. If any loan is being sanctioned by the branch on the concept of Credit Guarantee Fund Trust Scheme, that is without obtaining collateral security, the loan is being sanctioned by the branch manager, and the borrower has to pay the insurance towards CGT-MSC every year. It is the duty of the banker to say this. So as an auditor, you have to see if there is an NPA account, and if that unit has been registered or has been covered under CGT-MSC, whether the branch manager has paid the CGT-MSC insurance or not. In my experience, I want to say that most of the branches, they are paying only first year CGT-MSC fees, insurance fee, and not for the subsequent year. In subsequent year, if the unit goes bad, and then the bankers, they are not in a position to get any insurance compensation from these CGT-MSC corporation. So this point, it's a must one, you have to see this. Now, if it is an imported machinery, then you have to see whether the import license is being obtained, and what is the installation time of the machinery, that also you have to go through it, and what's the lead time to deliver the machine. Now you place the order, and say it will take 3 months to deliver the machinery. That means 3 months will be taken as holiday period. So that lead time also should be clearly mentioned in the sanction letter. And cost of the machinery. Yeah, Danny, I'll come to your point. Cost of the machinery to be compared. So what is the? Suppose if the parties say that, sir, I am comfortable with the machine, normally they will accept. But for the same machinery, there are some 2 suppliers or 3 suppliers, then the bankers, they will ask for the cost of the machinery. And Danny, CGTMSE insurance, that is nothing but a banker can give the loan up to rupees 1 crore without asking for the collateral security. This is the real scheme of CGTMSE. Now they restricted this amount to 10 lakhs. And for that, the government is giving guarantee to the bank that if you sanction the loan and the payment is not being made by the banker, we will make the payment, provided the borrower has to pay the insurance fee for CGTMSE insurance fee to the corporation, that is credit guarantee corporation. They have to make the payment, and this is every year they have to pay the amount. Sometimes the loan would have gone bad. At that time, the manager, what they did, sir, they have to seize the machinery, and after seizing the machinery, they have to sell it, and before selling it, they have to inform the corporation. Corporation means CGTMSE corporation. They have to inform the corporation that we have seized the machine and this is the value we are going to sell it, and there will be a shortage of 20,000 rupees. You have to get back the money to us. So this is called as CGTMSE. Okay, it is not like a mudra. Mudra also you can do it, but there is no that also they are covering in CGTMSE. Mudra loan also they are coming under the CGTMSE category, but there is no subsidy for CGTMSE category, and it is applicable only for the term loans. For the machineries only, it is not applicable for the cash credit loans. Yeah, Danny, you are also correct. Subharas also it is correct. You are correct. It is just like mudra. CGTMSE is a general name, but the government has given different names. And in Tamil Nadu, they are saying this as needs new, new entrepreneur employment development scheme. New entrepreneur needs. There they say that 1 crore can be sanctioned. For that also, they can get the CGTMSE cover. And that is another scheme in Tamil Nadu. One is called as Prime Minister Employment Generation, PMEGP, Prime Minister Employment Generation Program. That is also coming under the category of CGTMSE. And another scheme there in Tamil Nadu, it is called as Self-Employed Youth CU, Self-Employed Entrepreneur Youth, some CU schemes are there. That is also being covered under the CGTMSE cover. CGTMSE is a general scheme, but government is giving lot of names, say mudra loans also. So this is for that every year the party has to make the insurance amount to the banker, and cost of the machinery to be compared, and no sister concern quotation should be given. This also you have to verify, and few banks go and inspect the person who has given the quotation. This already and whether the semi-skilled, skilled persons or unskilled persons are available to operate the imported machinery or not, that also you have to verify it. And is the servicing facility with the spares available or not, that also you have to verify. Then what is the cost of maintenance? So every day you have to maintain, whether you have to maintain the machinery every day or not, that also you have to verify. What's the scope for modernization? Now you have purchased a machinery. Is there any scope to modernize the machinery or not? That also you have to see. And what's the maximum capacity for that machinery, that you have to verify. Then branch inspection after the arrival. Whether after the arrival of the machinery, the branch manager has to go and verify the machinery, whether the real machinery has come into the place. After that, whether the same machinery is being installed. After the installation also, the branch manager, he has to go and see the unit. Machinery arrival, you have to verify. Whether after the arrival, that machinery has to be installed. That also has to be verified by the manager. And if the machineries are being manufactured under fabricated mode, then you have to see the comparative study, and in the fabrication cost, that quotation should not be misused, because you can find a lot of misuse in the fabricated machineries. And you have to see the machinery register. You have to see the machinery register. And I'll go fast. It's a second-hand machinery. If it is a second-hand machinery, it has to be valued by a competent person. Who has to value the machinery? The valuation has to be conducted by the BE mechanical. Sir, Vijay Pratap sir, Ghosh and Jelani company is all old thing. I'm not going to touch it, but if you want, I can give the PDF of Jelani and Ghosh and Jelani committee reports. That's an old one. I'm not going to touch that Ghosh and Jelani. If you want, I will give the PDF of that copy to you. Valued by competent person. So you should be a BE mechanical can value the second-hand machinery and not the BE civil. Life of the machines that you have to see, comparative cost, whether the machineries are indigenous one or import one. And what is the labor available to operate the machinery? If it is a second-hand machinery, why they are selling it? That also you have to ask. And after selling it, after you purchase a second-hand machinery, what is the cost to maintain so that that is to bring the operation of the machinery to the original? Here, in one party who is aged about 72 years, he approached me, sir, I have closed the factory some 7 years back due to the family dispute. Now I want to start the factory. I said, okay, you are there, you can give collateral security, you might be having the machineries, but you have to see that machinery should be brought into working conditions. And if it is not there, it is very difficult for you to get the loan. So they put he has calculated it's a power loan. When they want to bring the machinery into working condition, he has to spend minimum of 75,000 per machines. He has got something around 400 machines. So 75,000 into 400, he has to pay the money from his own fund, because the bankers, they never give the loan to repair the machinery. They will give the loan to buy the machinery, and they never give the loan to repair the machinery. After buying the machinery, if there is any repair, they can finance. But in the initial itself, they will not give the loan to the machinery, to repair the machinery. And what is the past performance of the machinery, whether at the time of buying the machinery, whether the machinery has got the working condition or not, that also you have to verify. And why it is sold, the reason has to be recorded by the manager, because when they give the quotation for the second-hand machinery. Commercial complex and housing loan, all are common. First thing, plan approval should be there. Plan approval and stage release. If it is a construction, they release the fund. Whether it's a commercial complex or a house building, they release the stage. Only on stages, they release bankers, they release the fund. And for each and completion of the stage and before release of the next fund, they have to go and get the engineer certificate. And specific sanction for the construction, commercial construction should be clearly mentioned in the sanction. Stage release, you have to get the approved engineer's report. Based on the engineer's report, the bankers, they release the stage funds. And rental, is there any rental opportunity? It's a commercial complex. And the bankers, they went and see, is there any rental opportunity available to the unit or not? And if there is any deviation in the plan, normally they permit some 5% to 8%. And if there is any deviation from the original plan, then you have to give that point in your report, because the deviation has exceeded 8%. Our role is to report. That's all. You need not bother. What is the step the head office they are going to take? Our role is to report. This point you have to bear in mind. After completion of the building, then they have to produce the tax receipt to you, tax receipt to the bank. And to get this, you have to produce legal opinion and valuation certificate. And next one is commercial complex purchase. First is commercial complex construction. Now you have to buy the commercial complex. To buy any property, you have to give the plan approval should be there for any property which you are going to buy. The same rule is applicable for the housing loan also. If you want to buy a house property, that house property should have got the plan approval. Again, first thing for the purchase, you have to go through the purchase agreement. And what is the life of the agreement? Is it within 3 months or is it within 6 months? That you have to, before release of the loan, you have to consider the life of the agreement. And if you want to buy a property, that property has to be valued by the bank's chartered engineer. Bank's chartered engineer, he has to value. Suppose if the chartered engineer has valued only 10 lakhs, and if you have entered into agreement for 15 lakhs, the bankers will release the loan based on the 10 lakhs only. Suppose the margin is 25%, they release only 7.5 lakhs. And the remaining 7.5 lakhs have to be borne by the borrower. So that is why they are doing the valuation by the panel engineer. And after that, when they buy the property is standing in the name of whom? The property is standing in the name of the seller. After purchase, the document has to be converted. That is, all the house tax receipt and electricity bill should be transferred in the name of the borrower. And plan approval of the building, I already said, and the manager has to go for inspection and he has to verify it and he has to. Now, housing loan construction, same thing as commercial complex, housing plan approval, stage release, and final release will be done only after getting the completion certificate from the panel engineer. And the house should be constructed as per the plan approval, and there should not be any deviation. And after completion of the house, you have to get the house tax receipt. And the manager has to go for inspection after the completion of the house. And now house purchase, same concept, purchase agreement, life of the agreement. Then valuation has to be done by the panel engineer, and tax receipt in EB should be transferred in the name of the seller. For that, only plan approval building has got the bankers, they have sanctioned the loan to buy the house only when the property has got the plan approval or not. And the inspection report after the purchase, the manager has to go for the inspection and he has to give the report. Now, what are the other assets purchased? What's the general thing that you have to consider is you have to see the quotation, vehicle, government registration, whether the vehicle can be registered in the party's name or not. And the manager, after the purchase of the asset, he has to go for the inspection, and that has to be recorded and that has to be placed in the file. And for the agricultural term loan, it's very simple. Project cost. Why they have got the agricultural term loan? What they have to give they have to prepare the project report. Purpose of the term loan. So whether the loan is being sanctioned towards buying a tractor or towards meeting the crop cultivation, for what they are giving it. So you are the purpose of the term loan. You have to see this. You can find from the sanction letter. And what is the duration of loan? Is the loan for, is it for 3 years or 7 years or 8 years? I think yesterday our friend asked if the loan is being sanctioned for the coconut trees, for the coconut tree cultivation. It is there that they are permitting it, but it may be for 8 years or 10 years. So duration of the loan also you have to see. Next one is what is the government policy for the agricultural term loan? So if the government say that no, it should not be done, it should not be done. So here you can go and see medical plants are eligible to get the loan. Government policy is per acre, this is the amount. They say that for banana, they say that they are giving around 75,000 per acre. And for a medical plant, say I have moved with one case called Safat Musali. And the Safat Musali is the raw material for Viagra. And it's a raw material for Viagra. If you go and go for the Viagra, it is a ban. But there's a medical plant which helps the pharmaceutical industry to consider that as raw material. So one of my clients, he has approached me for the Safat Musali. So that is it's a raw material for a particular tablet. So for that, the government is giving 75,000 per acre. So that's a government policy. So you have to see when the banker moves and sanction the loans for a particular product, and that particular product should be approved by the government. So for that, that's a very big list for the medical plants. So this is also another practice area you please concentrate, because there you can help the customer to get the loan. So government policy is very much important. And now I am going for the agriculture, advances. What are the things that you have to see, about the vehicle loans? What are the things? You have to get the quotation for both the chassis as well as bodybuilding. In case of lorry, you have to get the quotation from one customer, and bodybuilding from the bodybuilding manufacturers. And for two-wheelers, you'll be getting only one quotation. And whether the dealer has got the capacity, whether he has got the license to supply the vehicle or not, that you have to see. And whether it's a new one or second-hand vehicle, that also you have to verify. And second-hand means valuation certificate has to be produced, and value for 3 years or more. But is those vehicles which has got life of 3 years or more, they have to get the valuation certificate. And the driving license to operate the vehicle, whether it has been operated individually or some drivers have to be produced, or even we can say that permit license should be there to operate the vehicle. Suppose if you are go and buy the auto, permit license is required. Permit license, that is driver license is different. Permit license means you are permitted to operate the auto. That will be issued by the concerned state government. For that, permit license is also required. And whether the insurance copy is available for the vehicles or not, on that. And duplicate costs. This is an old concept, because duplicate keys concept are not applicable. Now it's a self-ignition is there, so there is no concept of duplicate keys. And after the banker, they have given the money, and based on that, the party, that is a vehicle, or that is the supplier of the vehicle, he has to give the receipt for the draft as well as the sale invoice to the bankers. And after the purchase by the borrower, the vehicle has to be produced to the banker, and the photo has to be taken along with the branch manager borrower with the vehicle. So that also you have to see whether the any photograph of the vehicle is available on it. Suppose let us say it's a lorry. So lorry has that is the borrower has to bring the lorry to the branch space, and in front of the branch space, then the borrower has to ask the manager to come, and they have to take the photograph. It's the official record that asset has been created or not. And vehicle registration details, that is, it has to be registered before road transport officials, and you have to see that the charge has been created in favor of the bank. Hypothecation charge has been created in favor of the bank, has to be properly recorded in that vehicle registration details. These are the important area that you have to see with reference to vehicles. Next category is loan against deposit. So loan against deposit, yes, deposit, reinvestment deposit, RD. Because person has got deposit in bank, he can get the loan. Thing is, deposit receipts are available for your verification. So the bank has sanctioned the loan against deposit. The deposit receipt should be produced by the banker for your verification. That is only after receipt or deposit verification, deposit receipt, the banker, they have to sanction the loan. So on the back side of the deposit, the borrower has to discharge the receipt, the deposit. Next one is a lien has to be marked that this deposit is being against this deposit, the bankers have given the loan. A lien entry has to be marked on the deposit. So next one is lien marking. Third one is the interest rate. What is the interest rate normally on the fixed deposit? Is normally fixed deposit rate plus 2%. If the fixed deposit is for 6%, then when we avail the loan, they fix the interest rate at 8%. So this is the thing. And duly discharged, that is on the back side of the deposit, the signature has to, the deposit holder has to put his signature, and it should not be discharged by others. So this is also a fraud that has taken place in Lakshmi Loss Bank. It's a reported fraud. Because the deposit is owned by a company, and only one person has signed the deposit receipt and they got the loan. It's a reported fraud. So that's a starting point for the LVB. So you have to see this whether the signature of the depositor is being verified. Same person has to sign the deposit receipt duly discharged. The outstanding balance exceeds the value of the deposit. Whenever the outstanding balance exceeds the value of the deposit, that has to be closed. Normally, bankers, they never consider because they want to increase the advances, they want to maintain the deposits. That is wrong in principle. They have to close it. And the margin on deposit may be, if the deposit is less than 1 year, they consider 90% of the face value, 90% of the maturity value, they give us loan. If the deposit amount is for more than 1 year, they sanction the loan only to the tune of 75% margin. Sir, will the FD receipt be retained by the banker? Yeah, Danny, FD receipt should be there at the branch. You have to verify whether the original receipt is available with the bankers or not. And on the deposit receipt, they have to mark a lien. And the same has to be recorded in the system also. And margin of deposit is 75% to 90%. Now loan against NSC, NSS, normal. This is the loan that they are giving against the post office deposits, National Savings Certificate, National Savings Scheme, and NSS. And you have to verify, just like deposit, you have to verify NSC, NSS certificate. And for that, lien marking has to be done at the post office. For that, the post office, they will issue a letter that we have lien marked against this NSC and NSS. The problem is this, and the value, the loan value should not exceed the NSC value. If it exceeds, then the excess amount has to be paid by the party. As shrewd manager, what they will do, they close the NSC because they say that the value is going to exceed the loan. So they close the NSS or NSC and they give credit to the loan owner. So this point, as an auditor, you have to see whether the outstanding balance exceeds the NSC value. Normal interest rate, that is in deposit rate plus 2%. Here, it's a normal interest rate. And that is NSC has to be discharged in favor of the bank, and it should be encashed immediately when the outstanding value exceeds the maturity value. Otherwise, it is a loss to the bank and the officer is responsible. As an auditor, please see this point also during your audit. And the margin is 75% of its value. It will not be on the 75% on the face value, but before giving the loan, they will take some maturity value from the post office based on that maturity value. Because today you would have deposited, after 3 years, some interest is added to the NSC. So with the face value plus interest added, they will sanction 75% of the loan. And now loan against LIC, original policy has to be assigned in favor of the bank. Letter from LIC has to be obtained, and normal interest rates are applicable. Now advance to staff. Advance to staff is a normal thing. Normal interest rate is applicable. All existing staffs are eligible to get the loan and not the retired staff. Existing, I use the word existing staff. And even the loan is available to the available in the form of festival advance. The recovery in staff account in spite of the transfer. Suppose the staff is transferred from X branch to Y branch, the loan has to be recovered from the staff. Otherwise, this loan is being transferred to the other branch. If they transfer this to the other branch, you have to see whether the proper acknowledgement has been received from the other branch to you. And DPN, demand promise note, has to be verified. In all the loans, you have to verify the DPN. And regular NPA norms are applicable for the advance. There is no concession. And whether the loan is being extended to the staff, and if the staff is deceased or dismissed, that also you have to verify. What happened to those kinds of advances, that also you have to see. And now advance against the clearing fact, that is the checks have been sent for collection. It is being kept at the shadow balance. No further funds are allowed to be withdrawn till the amount is being given credit to the loan account. So this is called as advance against clearing facts. That is not permitted. If they permit, they have to pay some interest. To pay the 1% of interest or till the date of reversal. Suppose if the payment is delayed for 2 days, the party has to pay 2 days interest. Normally, advance against clear facts are not permitted. DPN has to be obtained, but when you go through the file, there is no DPN will be available. and regularly not to be sanctioned. Normally, it will not be sanctioned to all. Only few customers, they enjoy this benefit. Normally, they will not sanction this. And now advance against SIC units and see how many SSIs or non-SSIs are there in the SIC units. It's only for general information I'm giving. And to give loan against the advance against the SIC unit, you have to get the RO permission, and the units has to be identified as SIC. For that, they have to get a certificate from the district industrial center that this unit is a SIC unit, and units are found potentially viable but put under the nursing scheme. It's a potentially viable, so they are giving some additional funds to make that unit to come out of the SIC. So that is unit putting under the nursing scheme. Is there any scheme available or not? Unit is not considered potentially viable. Whatever money you give, this unit will not survive. If that is the banks, they are not supposed to give any loan against those type of units which are not potentially viable. So if you are there, and you have to see whether the sanction of advance against the SIC units have been carried out, have been sanctioned by the branch after taking proper care. And units under rehabilitation program. What is that? It's almost equivalent to nursing program. That is, they are going to sanction additional funds so that the unit will come into life. And advance against protested advances, there is a case has been filed by the bank. What are the important points that you have to see is, you have to see whether those advances are decreed, that means order is passed by the court, and suit filed, now only you have filed the case, and others which are about to be filed. So advance against suit, advance against protested file, you have to see the decreed, suit file, others. For that, you have to get a letter from the advocate, not you, that is branch has to produce a letter from the advocate that the case has been decreed and the case has not been, after decreed, it has got 12 years period to file the case towards the recovery. What is the recent position? What about the recent position of the suit file? And what about the recent position of the others case? So everything you can get a letter from the advocate, because sometimes the case is being handed over to the advocate and advocate is still to file the case. So you have to get a letter from the advocate, and the performing assets you have to transfer to this asset. So it is a D3 asset, or sometimes losses are will also be there. So transfer to performing asset. And what is the latest case position? A certificate has to be obtained from the banks. Current decreed accounts means the court has passed orders that the amount has to be recovered from this party. The bank line is genuine. And this is a decreed order, is nothing but the copy of the order, produced copy of the order. That is a judgment order passed by the court. That is decreed advances. Decreed, that means, okay, decreed, it has to be recovered. And for that, 12 years period is there. Latest case position to be obtained from advocate, and decreed. Why the case has not been decreed? Why the case has not been filed? Some 2 years back itself, the case has already been decreed. Why the case has not been filed? For that also you have to get the explanation from the management. And is there insurance available? What's the insurance availability? If there is any asset, and whether the insurance is available, whether the same can be adjusted against the loan also, that you have to see. And advance against agree advances, I just touched thing. You have to see the land holding certificate, that is all documents, patta, chitta, adangal, kandayam, all revenue records, and whether it belongs to the farmer or not. So you have to see that the agricultural land, they are based on the agricultural land, they are getting the agricultural loan. Based on the plot, you will not be getting the agricultural loan. And whether he is a farmer or not, farmer evidence that you have to see. You have to see the revenue records. Whether the document is being properly recorded in the revenue records of the government, that you have to see. What is the purpose of the loan? What is the purpose of the loan? Whether it is for direct agriculture, whether it is for auxiliary activities, whether it is for tractor loan, or whether they can give this for the working capital loan. So what is the purpose of the agricultural advances, that you have to see from the sanction letter. And allied activities also you have to see. What are the allied activities? Some of thing is fisheries, even milch animal, even dairies, even tractors are all coming under the allied activities. So to find the list, please go to NABARD, N-A-B-A-R-D, N-A-B-A-R-D. There you can find. And livestock loans are also called as allied activities, but livestock, say if it is a milch animal, so you have to get a doctor certificate. Whether there's a animal is there or not, that also you have to verify. For that you have to verify the doctor certificate. Whether the loan is being sanctioned for the short-term crop or long-term crop, that also you have to verify. And seasonality lending. Sometimes for some 3 months only, there will be cultivation. So sugarcane, so more than 1.5 years, say it will take some 14 months. So they sanction the loan for the sugarcane. So this sugarcane where they have to supply, when they supply this to the cooperative sugar mills, then the borrower has to make agreement with the cooperative sugar mills, and the cooperative sugar mill, when they make the payment to the instead of making the payment to the farmer, they will make payment directly to the banker. So you have to see the seasonality lending also. Sometimes nature self. Nature says that some flood will be there, you will be affected, and some earthquake you will be affected, and sometimes due to some famine it will be affected. So what's the nature self that you can get towards the agricultural advances? Now, stock statement, we have already discussed this yesterday. In the NPA, we have already discussed, and I'm now stopping the presentation, and I'll come with the packing credit loan verification in the afternoon, and I'm just stopping the presentation now. The time is 1:30. We will come back at 3:30. Okay, so that we will start with the packing credit loan and have a nice, I hope everyone has enjoyed it. And I'll start with packing credit loan, and remaining all the loans, including bank guarantee and LC and revenue records and everything, I'll cover, and will go fast wherever required, go fast wherever I require wherever it is required, I will give my explanation. Thank you very much. I am just stopping the presentation, and you can join me in the same link after, around 3:30 I'll come back. So 3:15 we will join. I think now as you can join at 3:15, and I'll be here, and we'll start the session by 3:30, and I may extend another half an hour after 6:30 also. Please spare some time. Thank you very much. I'm just stopping the presentation. Thank you very much.